There's some evidence that we are moving from peak inflation down lower. Where do we end up, I think, is the big question.
We're still overall, I think, in a very elevated inflation environment.
Even if the Fed is going to pivot, they're not going to talk about a pivot right now.
There is no Fed member that wants to go down in history as losing the fight on inflation.
The problem is we haven't really, I don't think, discounted the weakness in the economy that's coming.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Equity futures up 0.4% on the S&P. TK, the mount up of yesterday. What a move.
For those that don't have a Bloomberg terminal, the word is never. I have never seen what I witnessed yesterday on a short cover at 8:30, which continues through the day. And John, to me, that is the message, is that it continues through the day. We finished strong, and we start this morning with SPX, futures up 16.
Let's start with the index level stuff. The S&P up by more than 5%, biggest move we've seen going back to April 2020. And then let's go to the single names. Apple up 8.9%, Microsoft up more than 8%, Alphabet, Tom. Alphabet rallying hard as well. Amazon up 11% in yesterday's session. These were monster moves yesterday, Tom. Just absolutely phenomenal off the back of softer than expected CPI. My question, TK, is a simple one. You more surprised by the data yesterday or the way this market responded to it?
The data. The data is more important than the way the market responded. What can you imagine if we get another CPI and what is it on early December?
The 13th.
That gives us the same market reaction. There's a couple things critical here. We're going to go through some of it to give you perspective on this. Can we just start with we're focused on Carvana? It's story stock week. Surveillance is focused on one of the story stocks, Carvana. There's a whole Bitcoin blow up in that.
Sure.
Should we focus on Apple and Exxon, or should we, become addicted to these story stocks in this meltdown?
You've brought up Carvana, so let's talk about the moves yesterday. I think that stock was up by more than 30%, and I saw a ton of people out on Twitter talking about the same thing. If you look at the CPI story, used car prices plunged. Carvana in the used car business, Tom, rallies 30% off the back of that CPI print. That just tells you, TK, yesterday wasn't about fundamentals. It was all about repricing the Federal Reserve and basically nothing else.
And what was painful being in triple leverage all cash, I went back to the ancient marketing of mutual funds, this from the good people up in Boston at Putnam. If you miss the 10 days up over a long cycle, John, it's stunning. $10,000 invested. Do you want to have 21,000 out there somewhere or 46,000? If you're in cash like Tom Keene, you don't go up on a day like yesterday.
It's always been the argument to stay invested. Because if you don't, you're likely to miss those days. Tom, we need to talk about China as well.
Yes.
Subtle signs that they're shifting towards, let's say, softening their stance on COVID zero. Let's put it that way. If you look at the new rules, so the current rules, 10 days quarantine, a week in a hotel, 3 days at home. Okay, the new rules, 5 days in a hotel or a government facility, 3 days at home. It's marginal stuff, but context matters. The context for this, COVID cases nationwide have surged, 6-month high. So it's the signal that comes from that. It's the fact that you're seeing officials in China soften their stance at a time that COVID cases have been picking up. And there's a strong signal the market's running away with this morning.
Yeah, I read that very carefully. As some of you know, I got a family angle there. And the bottom line is it's still not worth traveling there. That was my summary of it. But as you say, it's marginal towards it. And maybe after the Congress and with President Xi meeting President Biden, supposedly, in Bali, maybe it is a new migration of China back towards science on this virus.
We've got a date for that on Monday for that meeting. We'll catch up with Anne-Marie in about 10 minutes to go through that. Tom, let's just talk about what we saw with plane ticket bookings. Here at Bloomberg, we went through the numbers. Bookings for flights into China doubled in the hour after that announcement.
Yeah.
Doubled. That just little marginal shift and all of a sudden, bang.
A lot of people want to go. Of course, economy to China is $300. Business class is $1,200. Have you seen the prices?
You've done the maths.
I looked last night at the business class prices.
Brutal.
There's like Paris and double it is Shanghai because there's so few seats.
Going to pick up on this story a little bit later in this program. Equity futures positive, 1/3% on the S&P 500. Let's whip through the price action. The Treasury market is closed for Veterans Day. You know what that means, Tom? Bramo's away. Bramo takes the day off when the bond market is closed. It's official. New rules.
Yeah.
So we look at the bond market. Yields higher there by 6 basis points, just north of 2% on a German 10-year. In the FX market, let's just sit on foreign exchange for a moment. Euro dollar back to 102.64, up 0.5%. And go through the dollar moves, Tom. The dollar index yesterday, worst day since 2015 on DXY. Cable, that was the biggest move on cable, the pound against the US dollar, going back to 1993. On dollar yen, for a move that big, that much dollar strength, you've got to go back to 1998. There were monster moves in foreign exchange.
Monster moves, and it becomes cumulative. Thank you, Vice Chairman Brainerd, for that. On yen, I look carefully, John, breaching 140, a lower number is a stronger Japanese yen. And to get back to stasis before this foolish, YCC policy, is a 20 big figure move in yen, 139 down to 110-ish. These are huge potential moves if you finally get weak dollar.
Chris Morangi joins us now. I'm happy to say the co-chief investment officer at Gabelli Funds. Chris, we're lucky to catch up with you, sir. Let's just start with yesterday before we get our teeth into this morning. What did you make of that?
Yeah, well, we try not to get too caught up in the emotion, but we'll enjoy it, especially at the end of what was a very challenging earnings season. It was pretty sweet. I think if you look at the reaction yesterday, it's all about rates. If you price stocks using a discounted cash flow and you take the denominator down by 30 basis points, you get almost exactly the move that happened yesterday in the S&P. Now, the real world doesn't work that way. I think it was a lot more about short covering and positioning and things like that. But it's nice to see some follow through this morning.
Chris, as you go into next year, can you believe in growth at a reasonable price? I understand value. The acclaimed Gabelli trade on Cadbury Schweppes is just one example, Cadbury Candy rather, years ago. But Chris, can you find value in the growthiness of tech since it's come down so much?
Yeah, we do own some of those names. We've been looking at them more recently. Obviously, it's good from our perspective to see some cost discipline on the part of some of the big tech names. They really, I think, had a lot of hidden earnings power and some of that overspend, and that will normalize. And it's probably a little too early to get involved with cyclical names, including ad-related names, but they're certainly on the radar.
Gina Martin-Adams at Bloomberg Intelligence really focused on the income statement on operating margin. Is that the study at Gabelli, or are you looking at free cash flow or use of cash? What matters into the new year?
Well, all of those things, including free cash flow, interest expense, and interest income actually really matter.
That's really shifted, hasn't it? Dive into that. That's too important. Dive into interest expense and why that matters.
Yeah, you could get away with being unhedged on your balance sheet for a very long time when interest rates were very low. It didn't matter if you carried cash. Now it matters. If you're just sitting in cash, there's a real cost opportunity there, and if you're not hedged, you're paying a lot more in interest expense. And, tax rates probably not going to go up given the split in Congress. But all these things matter. So
let's go to where Mario's been for years. I think of all the work in entertainment that he's done, TCI ages ago. Malone, of course, looking at Warner Brothers Discovery, that's halved in value, even down 60-70%. The streaming wars have become a value, and with interest expense, a challenge. Can you buy Disney? Can you buy WBD?
Yeah, we do own a number of those names. And again, it's going to be a tough slog over the next year. Like some of the big tech companies, those companies are going through significant transitions, cost cuts. We're probably a year or so away from seeing the streaming efforts turn profitable and really show some results. And obviously the downturn in the advertising market, which has been significant and accelerated recently, has not helped. But again, that will turn one day, and those are going to be the stars probably not till 2024, but at some point.
Chris, you mentioned the cuts. Let's talk about it. The Journal out yesterday reporting that Amazon's launched a cost-cutting review. These numbers just jumped off the page to me. Between the end of 2019 and the end of 2021, Amazon hired more than 800,000 employees. TK, that number, 800,000 employees from the end of 2019 to the end of 2021.
John, it's like using my entourage. I mean, there's an expansion. It feeds on itself.
Hey, these are real numbers, TK. They're massive numbers. Chris, it makes me wonder how much excess we need to cut here as some of these tech firms. Just how big do you think this effort needs to be?
Well, it's big, and it's not just tech or the big banks. Again, we just referenced the earnings season that we just came through. We're hearing this across the whole economy. Industrial companies, consumer companies. Some of them haven't publicly announced cuts, but they're all considering it. Some of them are small, some of them are big. But I think it's important to take yesterday's move in context. What the Fed has done is really having an impact. You're seeing anecdotally consumer demand finally taking a hit, and companies respond with layoffs, and that is obviously the intended effect for raising rates. So we're going to see, probably weaker payrolls going forward, and that should be just more confirmation that the Fed can probably back off a little bit.
Hey, Chris, this was awesome. What a move yesterday. Keep shaking my head about it. Just phenomenal. Chris Marangi there, Gabelli fans. Thank you, sir. Did you see the Fed speak? Just had the live blog of Federal Reserve officials yesterday.
The live blog, yeah, it shows how silly it is to me.
Loretta Mester of the Cleveland Fed. I currently view the larger risks as coming from tightening too little. Still the view of Mester shared by others. And I have to say they welcomed the inflation data yesterday overwhelmingly. You go through the Fed speech, you see that.
Say it was terrible? Come on.
But ultimately, it validated the stance they'd already taken, which was to drop down from 75 to 50.
Yeah.
But no one was doing a victory lap off the back of that data yesterday.
Exactly. In the parlor game, and to be fair to them, and I have an immense respect for President Mester, they need more data. If you're going to get a vector going on disinflation, you can't do it with 1 point, John. You can't even do it, I would say, mathematically with 3 points. So we're out to inflation studies of February and March where institutions can get a confidence and opinion.
Do you want the appetizer for the G20 from Secretary Yellen right now? Speaking at a business forum in Delhi, saying this: we must help relieve emerging market debt burdens. Many EM countries face unsustainable debt. A big feature potentially of this G20, Tom, is going to be debt sustainability.
Well,
what you could see from the bulk of the G20, -1 maybe, which is China, is a big push on this effort.
My conversation with Gita Gopinath at IMF started that off, and I'm sorry, it's front and center for these institutions. John, how accommodative are we? The Bloomberg Financial Conditions Index, -0.886, hasn't been there in ages.
The conversation continues in the next hour. Sarah Hunt of Alpine Saxon Woods, looking forward to that conversation. The equity market rally continues as well. Yesterday on the S&P up more than 5%. On the NASDAQ up more than 7%. We're up this morning by 4/10.
On the break,
S&P.
I'm going to look at Carvana.
Check it out, TK.
Check it out, yeah.
Quite a move. Live from New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia says it will hold its first nuclear talks with the U.S. since the invasion of Ukraine. According to the Foreign Ministry, discussions will be held late this month or early December in Cairo. They'll focus on inspections of atomic weapon sites under the New START treaty. The British economy shrank in the third quarter, marking the start of what's expected to be a protracted recession. Gross domestic product fell 0.2%. Consumer spending and business investment both fell during the quarter. The Bank of England sees a recession persisting into the middle of 2024. It's a significant recalibration of China's COVID-0 policy that has isolated the country. Beijing has reduced the amount of time travelers and close contacts must spend in quarantine. Now it's also pulling back on testing. Plus, a controversial system that penalizes airlines for bringing virus cases into China will be scrapped. The U.S., Japan, and other countries will offer Indonesia a climate finance deal worth at least $15 billion. It's designed to help the country shift its power grid away from using coal. Details of the agreement will be announced next week during the Group of 20 summit in Indonesia. And a stark warning from new Twitter CEO Elon Musk. Bloomberg has learned that in his first address to employees since buying the company, Musk said that bankruptcy was a possibility if it doesn't start generating more cash. Investors are already offering to buy Twitter debt for as little as 60 cents on the dollar. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Inflation came down last month. And mainstream economists are saying this is a really positive sign of the resilience of the economic recovery. It's going to take time to get inflation back to normal levels. We can see setbacks along the way, I realize that. But we are laser focused on it. That's why it's so critical for us to pass important legislation this year to lower those costs for families.
The President of the United States there, getting some more good news this week from the CPI report, inflation report in America yesterday. Live from New York this morning, good morning. Here's the equity price action. What a move we saw in yesterday's session off the back of that CPI print. A monster move on the S&P.
Monster.
Biggest one-day pop going all the way back to April 2020. Yields plunging in yesterday's session on the 5-year Treasury. Biggest one-day drop going back to 2009. This morning, the Treasury market, of course, closed for Veterans Day. So we look to the Bund market in Germany. Yields a bit higher, up 5 basis points there to just north of 2%, Tom.
Oil, we got a note up 3%. $97 rounded up on Brent crude. That gets my attention into the weekend.
China reopening.
No question about
that story. Do you want a statement from the former president?
Oh, please. Vamp into that as we go to Anne-Marie.
Here's the quote. Ron DeSanctimonious is playing games. The fake news asked him if he's going to run if President Trump runs, and he says, quote, I'm only focused on the governor's race. I'm not looking into the future. Well, the former president says, in terms of loyalty and class, that's really not the right answer. And Tom, that's a select quote because this goes on and on and on.
On a Friday here, as we calibrate to the reading of the weekend and are really starting out to begin to look at the year end here and into the holiday season, we're going to focus here for our international audience particularly on this relationship of the former president and the present governor of Florida. And we can do that by looking at the, quote, average middle of the pack White House correspondent. Joining us now, always average at the White House, Anne-Marie Horton. Wow, Anne-Marie, the language described for our international audience. Is it meanness? Is it comedy? What is the tone you detect from the former president towards the governor of Florida?
He's clearly unnerved. There's been a number of messages he put out last night, and this, of course, comes ahead of the fact that he also sent out an invitation for his announcement at Mar-a-Lago next week, even though many in his inner circle are trying to get the president to really hold off, saying, please wait till after the Georgia runoff, which is going to be December 6th. Please wait until you decide to make this announcement. But he's going ahead. But you can see from this statement, I guess it's a statement, that John read out some of this. He's clearly bothered by the fact that the Republican Party is shifting away from him. You have editorials like the Wall Street Journal yesterday putting the blame on a lot of the quote-unquote red wave we were supposed to be, laying the blame on the former president. And now you see the money as well drifting towards the governor of Florida, Ron DeSantis. And you see the former president very unnerved by this, almost, I would say, melting down.
John, quote, has the advantage of sunshine where people from badly run states up north would go no matter who the governor was.
I'm not going to weigh in on that. I will say this, and AMH kind of gave a nod towards it. The Murdoch Empire roasted the former president, Tom, in the last 24 hours. Roasted him. It was the Journal, the New York Post. We talked about the front page of the New York Post yesterday. AMH, but the president, the former president, still talking about a 9 p.m. announcement, is it, on November 15th?
Yeah, 9 p.m. announcement, also kind of a weird time to be making an announcement. Usually when you are going to announce your bid for the White House, it's during the day. You want to make sure all the press are there, all the cameras are there, and I guess he thinks that 9 p.m. is a good time for this, although it's quite late in the evening. But again, let's wait and see what he has to say, because there are those around him that are really trying to push this further down the timeline. But it does look like the president, he's teased it up so much now, he's going to have to come out and say something.
Emma, you mentioned money. You're really good at following the money. We've got a whole team in our Bloomberg office that does that. Does President Trump need the money right now to begin a campaign?
Well, if he's going to be running for the White House, he's going to need more of the big backers, but you see them moving towards, like the Ken Griffin likes, moving towards the Florida governor, Ron DeSantis. That's who they want to invest in. Individuals like him, individuals like Mike Pence, individuals like Mike Pompeo. The field is very open right now for the Republican Party, and just because the former president is getting involved doesn't mean these individuals are going to be backing down. Where the former President Trump has a lot of leeway in terms of gaining momentum and fundraising is grassroots. It is grassroots of his party, people who will follow him and continue to follow him to his rallies, etc., and they donate, but very small nominal amounts, not the big chunks of change you need to run a U.S. presidential election, which we spoke about when you guys were here in Washington, D.C., that they last about 2 years long.
Well, it's just started right now. I think it already started a number of months ago. Anne-Marie, just briefly, go through the scores. The president of the United States, the current president, Joe Biden, feeling good about himself this week. This is still a narrow race. A set of narrow races. Can you run us through where we are?
Well, in terms of right now with the map, we are still waiting, and it is narrow. It does look like the Republicans, even though it's narrow, will get the seats to get a majority in the House. And then the big question for the House is how much pushback is Kevin McCarthy going to get, poised to be the Speaker, because of the fact that this was a red ripple, not a red wave. The Senate seats you need to focus on right now is Nevada and Arizona. So Arizona, it does look like the incumbent Mark Kelly will be able to maintain that seat, but we should note they are still counting votes. These mail-in ballots, they are still counting. In Nevada, you can count votes until, I believe it's November 15th or 17th, as long as it's postmarked on Election Day. And Nevada is where it's really a toss-up at the moment. You have Adam Laxalt, the Republican, ahead in the race, but they are still counting in some very Democratic-leaning counties. So you could see the Democrat come ahead there. If the Democrats are able to get these 2 seats, it doesn't matter what happens in Georgia. They have a majority. But if it goes one red, one blue, it's all going to come down to Georgia.
Anne-Marie, we'll catch up with you in the next hour as the president looks set to head to the G20. What are you banking over there?
I'm banging over here looking at Britain. There's so many stories today. It's a very rich Friday. No, it's a very rich Friday, folks. There's a lot of stories, and we haven't even mentioned BitDog today, which is a serious issue, some real hardship there. John, contraction is the word that's being bandied about, not recession.
Growth, sure.
But I'm sorry, Andrew Bailey, in a very sad way, has had a very good week looking out at this dearth of growth in the United Kingdom.
One caveat with the UK, remember extra bank holiday in the UK because of the Queen's death, so softer growth numbers there. But overwhelmingly, even if you take that out, Tom, softer growth in the UK is a problem. But can we just look at where cable is right now? Just look at that. Look at the number. 103.50 was the low. Only about a month ago. Right now, 117.
14 big figures.
Hey, that's a massive change. A massive change.
Did you take advantage of that? How did you play that?
How did I play that?
Yeah, you know.
I'll give away the
Triple
Christmas
leverage,
presents.
or, you know.
I'll give away the Christmas presents. The Christmas presents
put
were purchased.
Really?
When sterling was at about 108.
Very good.
Okay.
That's good.
From New York City, equities up. This is Bloomberg. Equities up across the board on the S&P 500. Good morning to you. Building on the rally of yesterday. Can we call yesterday a rally? Yesterday was a melt-up in the equity market, Tom. That was an explosion higher off the back of the CPI print.
This is really important. I did the math this morning. What you do, folks, is you take a log, Standard & Poor's 500, which mathematically is the correct index, not the Dow, and you look at it and you do a regression. And, John, basically we came up to the resistance level. When an index goes up, it hits the resistance, the history of a trend. And critically, on Standard & Poor's 500, we are not through resistance. On the Dow, we are. We're out a good 3 standard deviations. But, you know, I make jokes about it, folks, but John's got a point on the math differentials here. And the answer is we begin Friday not through resistance, even with SPX up 0.5%.
Biggest one-day move going back to April 2020 on the S&P, on the NASDAQ. This from Michael Hartnett of Bank of America this morning. So that calling in inflation that we've all been waiting for should be good news for tech stocks. It was yesterday. But ultimately, here's the quote from him this morning. A multi-year derating of tech and FANG is just beginning. That's what they believe, Tom, that it's just beginning. That, yes, you get some kind of relief rally, if you want to call it that, yesterday. Short squeeze, you take your pick. But, Tom, ultimately, they believe we get new leadership from elsewhere, and it comes from commodities, small cap value, U.S. industrials, European banks, emerging market resources.
Right.
Take your pick.
We're going to the source. You need to stay with us for Global Wall Street. We are thrilled that on short notice, Benjamin Laidler will join us here later on. And let's remember, John, somebody has to call the bottom, and Laidler was brilliant the end of, I believe it was 18. And then brilliant again on calling some form of bull market bottom. Up we go. And he said, the bottom is in, as he wrote this morning.
So we've got a new question to ask. And it's not, have we seen peak inflation? We need to be asking a different question now. And I think many people are asking this question. Where does CPI bottom, Tom? Where does it come down to and plateau? And how troublesome is that going to be for this Fed into next year?
You're correct. I do think, John, this is a huge, this is the fundamental issue that you address. And the answer is, I have no value here. And I frankly don't think Lyle Brainerd or anybody else has a value. We don't know. I would suggest on core inflation, getting below 3 will be a shock. You want to see another market move like yesterday? You get a 2.9% on core out there somewhere, and up. That really signals a disinflation trend in tech.
We're light on Fed speak today, so that's some good news. I want to whip through the bond market for you. Veterans Day, so the Treasury market is closed, as it should be. I don't know why the equity market's not closed too, but we can talk about that another time. I know. In the bond market, we look to Bunds. German 2-year up 5 basis points to 213. On a 10-year, just north of 2%, up 6 basis points on the day. The 2-year, a year ago, November 19th, Tom, negative 78 basis points.
Well,
almost 12 months ago.
You see it in Germany.
Huge turn.
You know, the market's open, bank holiday. And we don't have bank holiday. What's a bank holiday? We don't have those in America.
What do you call them? Public holidays?
I don't know.
Yeah, that's what you call them.
Bank holiday.
We just call them bank
We
holidays.
were there for it. It was really something to see the United Kingdom shut down as it did for the funeral.
I'm going to finish on foreign exchange just briefly.
Please.
The US dollar yesterday, DXY specifically, worst day, going all the way back to 2015. And if you take a single currency, and we can look at the euro briefly at 102.82, very close to 103 this morning. Let's look at cable, biggest move back to 93. Dollar yen, biggest move back to 98. Aussie dollar, biggest move back to 2011. These were just monster moves yesterday, Tom.
Let's go through the math of this now. Kamkacha Trivedi joins us now, head of global foreign exchange and much more at Goldman Sachs. Honored to have you on. Kamkacha, what I find so important here is to get the math right. Was yesterday a jump condition? Was yesterday enough to signal a trend? Mark Chandler at Bannockburn says chasing weak dollar here is a challenge. What have you published this morning after yesterday's historic day?
Look, I think that yesterday was a historic day. I think there's no question about it. You had some very, very large moves in markets, not just in FX and equities and rates, as you were describing as well. And it also shows you, I think the fundamental thing that it tells me is that, you had a very long move higher in the dollar. And, as you've gone higher and higher into thinner air, what it takes is, one important piece of news. It was important. And I think it's kind of, you can have a big move on the back of that, given the way the market is set up, both intellectually and in terms of positions.
Where is the market position right now? The phrase short squeeze is tough in foreign exchange. Within a short squeeze, do you get a massive weak dollar off positioning right now?
I think there is some of that you saw yesterday, and I would say that what the market has essentially done is moved a lot more probability weight into the kind of soft landing camp that has been our sort of modal scenario from our economists. That comes with higher equities, it comes with a weaker dollar, it comes with lower rates as well. And I think you need to ask yourself what side of that you're going to get challenged from. I suspect, even with the inflation data that you saw yesterday, core CPI 0.3 month on month, on a 3-month average, that's kind of 0.5. That's still pretty high when you think about the overall trajectory.
When we look at weak dollar and off of Secretary of Treasury Yellen's comments at G20 on the fragility of EM debt, does weak dollar assuage the challenges of weak EM debt? Does it solve the problem?
I think it makes it a little bit easier, but the key problem many emerging markets, and by this I mean the high yield frontier sovereigns have, is one of market access. At the rates that are prevailing here, not just at the very front end, but all along the curve, these are pretty expensive levels for a lot of these sovereigns to borrow. They're running out of reserves that were limited in the first place. And so until you see a resumption in market access, which will probably need more price action, more days like yesterday, not just sort of 1 or 2 days before that market access reopens, that is what is the binding constraint for many of these emerging market sovereigns. I mean, again, the high yield ones, and that's what it will take to make it easier.
Kamaksha, some of these EM central banks were the original front loaders. I'm thinking of Brazil. They really got out early. The Fed uses that phrase front loading. Really, they're playing catch up. What difference has that made for the likes of Brazil and others who went much, much earlier with hiking rates?
Look, I think 2 lessons from Brazil for the rest of the world. One is, going early, like you say, going early, going hard, going after inflation, whether it was, headline or core, I think really did help, Brazil, Mexico, some of the few currencies that held their own versus the dollar for much of the past year. But another lesson also, and this, coincidentally also came in the last couple of days, is that even a country which has been furthest ahead, like Brazil, as deep into its disinflation process, you can still have upside surprises in inflation after a string of downside surprises. So again, I would just be careful with over extrapolating too much from one CPI print. That's been the lesson throughout this cycle. It's also a lesson from Brazil.
That can change again on December 13th. That's kind of the runway into the end of the year. We've got December 2nd payrolls. I believe on the 13th, right. You have CPI, the 14th, the Fed decision. On Monday, Kamaksha, our very good friend and Washington bureau chief, Peggy Collins, is going to catch up with the vice chair of the Fed, Lael Brainerd. What do you want to hear from the core of the Federal Reserve through next week?
Look, I think that, given what the market has done and given the financial conditions easing that has, been delivered over the last few days, really, even since the last Fed meeting, I guess, I would be curious to hear how they think about that. You had one reading that probably is much more helpful. You had some data that the labor market is adjusting, again, encouraging. But I would expect that they would still be looking at some of what is going on in markets with a little bit of trepidation.
Kamaksha, thanks for joining us this morning. After Trudy, can we call that historic yesterday? I think we can.
Yes, oh, absolutely.
Trivedi
absolutely.
Of Goldman Sachs.
Absolutely.
Had tons of Fed speak. This was from Laurie Logan, now of the Dallas Fed, the president of the Dallas Fed. A slower pace should not be taken to represent easier policy. They've been teeing this up for a while and moved from 75 potentially to 50 in the December meeting. This morning's CPI, yesterday's CPI, were a welcome relief. But, Tom, there is still a long way to go. And you saw that in Fed speaker after Fed speaker after Fed speaker yesterday.
They're public officials. They're supposed to be conservative, cautious, and they got to be wildly exposed and wait for the data. We observed yesterday the market didn't wait for the data.
Not at all.
They got one data point, boom.
When does it become problematic? Do they still want financial conditions to tighten? Are they happy with the S&P at 4K?
We're advantaged by the Bloomberg Financial Conditions Index. I believe it's 11 ratios. It went through one standard deviation negative. It became more accommodative yesterday. John, I'm trying to have fun. I was thrilled to see Calvin Phillips made the World Cup team.
You've seen the squad.
Can you explain to dummy Americans like me, this is exciting right now because people get chosen. And like a guy in the Tots didn't get, or on Leeds rather, didn't get picked for the Polish team. These guys are crushed
I also think
they're not picked.
It's really sad because some players have faced injuries at the wrong time of the season, because typically we'd have a World Cup in the summer and we're having it in the winter. And a lot of these players have been playing really, really condensed fixture schedules, Tom. So lots and lots of games all at once, and they're picking up injuries. The one that stood out for me yesterday was Harry Maguire in the England squad. Can't get a game for Manchester United that often.
He's not on the starting team.
The likes of Tomori at my beloved AC Milan didn't make it into the squad.
Does one guy pick the team, Mr. Southgate?
Southgate does. And I'm sure he's got some consultants around him, but ultimately he gets the final call.
Okay. I think when we visit Qatar, I think Anne-Marie's going through that. I believe we are. I think surveillance, we should do a World Cup thing.
It starts in 2 Sundays. I'm waiting for the World Cup bracket to come up on the Bloomberg terminal.
How do you pick a goalie for England? I mean, they must have, 20 phenomenal goalies within the United Kingdom?
Sure, but the problem over the years, Tom, as
Jordan
you know,
Pickford.
is as the Premier League has got much, much better, particularly over the last 10, 20 years, it's meant a lot of the greatest foreign players come to play in the Premier League, and the choice in the top division is maybe not 20 goalkeepers, it might be a handful. It's been a problem for a while. Okay. If you can call it a problem, I would suggest that the foreign players have enhanced the league and lifted everybody's.
Tots Leeds snoozer?
No, not necessarily. I love watching Leeds.
Okay.
Everyone thinks that I'm a Tottenham fan now. Do you know that? Because of you.
My deepest sympathies.
Because of you. Everyone thinks I'm a Tottenham fan.
Well, Mr. would love that. You and I could go together. We could bond.
Go watch some games.
Watch a hat trick.
2 Sundays away. Equity futures up 0.5%. Coming up on this program.
Beckons.
Tina Fordham of Fordham Global Foresight from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The Biden administration is sending Ukraine more weapons and military vehicles valued at up to $400 million. The package includes Boeing's Avenger anti-aircraft systems, and weapons are being taken from existing U.S. stockpiles. A federal judge in Texas has struck down President Biden's plan to forgive student loans. The judge called it one of the largest exercises of legislative power without congressional authority in the history of the United States. The Justice Department says it will appeal. The plan is already on hold under an emergency stay from another federal court. The energy minister of Saudi Arabia says OPEC Plus will remain cautious on oil production. That comes weeks after the group made the Biden administration angry by lowering output. Prince Abdulaziz bin Salman spoke to Bloomberg at the Climate Change Summit in Egypt.
It's about being responsible and not to lose sight of what the market requires, the industry requires, which is market sustainable stability of the markets.
OPEC Plus meets on December 4th to decide whether to cut production again. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
In the upcoming months, in light of the cumulative tightening we have achieved, I expect we will slow the pace of our rate hikes as we approach a sufficiently restrictive stance. But I want to be clear, a rate hike of 50 basis points would still be significant.
That message from Fed speakers echoing across trading floors yesterday. Patrick Harker, Philadelphia Fed president, one after another, all saying the same thing. I worked through that speech with Mike McKee yesterday when it came out. This line here, TK, you'll like this. Inflation is known to shoot up like a rocket and then come down like a feather. Patrick Harker of the Philadelphia Fed yesterday.
Each of these people is different. They've all got a character and, plus minus this and all that. And to compare, for example, Vice Chairman Brainerd with legit massive PhD monetary chops with someone like Harker, who also has chops, but is really attuned to the business cycle and what it means. And of course, that fits with Philadelphia so well with all of the industry of New Jersey and Pennsylvania and the rest of the district. What I find fascinating there, and the word that we use, folks, is stochastic, which is fancy talk for pointy. The inflation goes up, John?
Yeah.
And comes right back down. Is that where we are right now?
You know who used to write the best speeches? Do you remember Richard Fisher?
Oh,
Formerly
yeah.
of the Dallas Fed?
Yeah.
His speeches were great.
Yeah.
No
Well,
jargon whatsoever. He wasn't a PhD economist.
No,
He wasn't
I don't
that kind
agree
of
with
guy.
that.
It was very, very direct. It wasn't any of
Yes.
that kind of stuff. It was just direct and easy to understand.
It was different than Clarida, different than Blainer, different than Blinder from another time. But I think Fisher's always been underestimated. I take great issue with people that go, oh, yeah, he's a guy from Dallas. And I'm like, no, actually, he's much more than that. That is the same with Tina Fordham, founder and geopolitical strategist, Fordham Global Foresight, with some serious abilities, including support of the University of Cambridge foreign policy effort. Why is she on? It's real simple. Tina Fordham wrote a blistering op-ed in the Financial Times about the future of America. Tina, you dare say use parenthetically from a removed distance the phrase Civil War, but what you say is this could be a take no prisoners Congress. What do you mean that a Republican Congress will be take no prisoners?
Well, that's me trying to be diplomatic, Tom. But in this blistering, as you called it, op-ed piece for the FT Alphaville, what I really wanted to do was poke a little bit at particularly U.S. investors' complacency about a divided Congress being kind of reflexively a good thing. We had Elon Musk coming out and saying that, and people resorting to what I consider some pretty sloppy shortcuts in our thinking when the Republic, as we know it, really faces some serious pressures. Now, my piece came out the day of the midterms, and since then, the less qualified contingent, shall we say, they call this candidate quality, in fact, in the parlance, didn't perform very well. And I think a lot of those with fire in their bellies have been somewhat chastened, but we still have a number of underlying indicators in the US, support for political violence, the polarization that we've all just sort of got used to. that are alarming. But I
Right.
think that there were some real reasons for optimism coming out too.
The arrogance, the political arrogance led by Tom Keene, is that we're a two-party system. We have learned in the last couple days that we're a four-party system of extremists and two moderate parties. Do you agree with that? That it's a four-party America?
Well, our structure is built for a two-party system, but within each of those parties, we have contingents which make coming to any kind of agreement on anything extremely difficult. Now, the so-called MAGA Republicans didn't do as well as hoped, but they're still hugely influential. And I suppose what I'm thinking about the most right now, because it's that time of year when we have to do the year ahead outlook, is who's going to run America? And from where I sit here in London and in Europe, what does that mean for the future of the international system? Trump is less likely to return to the White House. I can tell you that people here really breathed a sigh of relief, but the race is wide open, and that is a new variable, I suppose, one that we hadn't really got our heads around.
Well, Tina, let's turn to the G20 and talk about the international story. The president with some renewed confidence, some people might say, after this week. How do you think that's going to play out next week?
Well, Biden is entitled, I think, to have a bit of swagger in his step. I know that's an unfashionable thing to say, but, I'm all about providing an analytical framework. The president's party normally gets hammered in midterms, and Democrats performed better than anybody thought. Personally, I'm not excited about the fact that we have such an elderly leadership. I think a gerontocracy for a country that's still quite young is worrying. But when Biden goes to the G20, Putin is going to be there via Zoom. I think that's remarkable, a remarkable change from a few months ago when we were talking about, with genuine concern, whether Beijing's announcement in February of a friendship without limits with Russia was going to be a major change to the weights in the international system. China is not using any of its global political capital to help Russia. Russia finds itself marginalized, and when we look at these kind of big macro dynamics, India also has not hesitated to be critical, to use its vote at the UN, and Saudi, which had aligned with Russia, or at least that's how it was perceived at OPEC, seems to be trying to kind of adjust there. So we're looking at a shift in the planetary weights in the global solar system, and a much more marginalized role for Russia, which has been a spoiler really since the collapse of the Soviet Union, or since Putin came to power in 2000.
Tina, briefly, if you can, we understand now, it's been confirmed, a meeting between the President of the United States and the Chinese leader on Monday ahead of the G20. We often talk about deliverables. Are there any going into this?
I don't think we should expect deliverables. This is a time, I just talked about some of the tensions in the relationship. Biden goes not as somebody who, was defeated in midterms, but as someone who I think intends to run again. He has clout, and the U.S. and China on climate, and particularly it was an area of cooperation. So I think they're going to want to find a bottom to this relationship. Find a floor and move on from there. China's not happy about the U.S. cramping its style on tech.
Yeah.
But I think there's the U.S. has stood its ground in a way that commands more respect on the world stage, particularly after the fiasco, the withdrawal in Afghanistan. Right, that was a huge blow.
Tina, thank you. Tina Fordham there of Fordham Global Foresight. Looking ahead to the G20, Tom, next week.
Well, G20, Emery Horton will be there along with our Singapore, Southeast Asia team as well. I would suggest, John, we've got to look at this as a continuum of Egypt COP20, G20, and then I believe the president goes to Cambodia as well.
It's a long trip for the president.
This is exhausting trip for this president. We got to come back and talk about the surveillance deliverables.
What are the deliverables?
Got to talk football once a day. We did that.
Is that what people are calling for?
Once
Once the World Cup starts, or ahead of the World Cup?
More football.
There's some evidence that we are moving from peak inflation down lower. Where do we end up, I think, is the big question.
We're still overall, I think, in a very elevated inflation environment.
Even if the Fed is going to pivot, they're not going to talk about a pivot right now.
There is no Fed member that wants to go down in history as losing the fight on inflation.
The problem is we haven't really, I don't think, discounted the weakness in the economy that's coming.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
The week should have ended yesterday after that move. That one-day move, Tom, was a move for the month, maybe even a year. What a rally. From New York City this morning, good morning, good morning. For our audience worldwide on TV and radio, this is Bloomberg Surveillance. Equities up again by 0.5%. But TK, yesterday's moves, monster moves.
Looking at the SPX futures this morning, John, it continues. Is it convex? Is it, concave? Looking at an acceleration trend off of yesterday. It's a little bit less accelerated than yesterday, but we are up this morning. Futures up 17, and it continues. And guess what? It's reassess Friday.
I like to ask this question. If I told you ahead of time what the data would be, precisely where inflation would come in, would you have guessed the market would have moved this much?
I would have said two things. And we had Chris Marangi brilliant on this last hour. I would have said, yes, it would move. And I would have been more assertive than Mr. Marangi and said it would move big, not like we saw, because of all the gloom that's out there. And the gloom, John, is the amount of people loaded at the boat with cash.
Bullish recipe this week, that's for sure. Divided Congress, maybe still waiting for the results of that. Downside surprise on CPI yesterday, this morning. A conversation about reopening China. Rumor after rumor after rumor after rumor.
Yeah.
And today, they make a subtle shift on a set of rules, TK.
My proxy on that is I look at any given luxury purveyor of goods, and they've had a very, very good week, tangentially working on the reopening of China. But I would extend it, John, to G20 and say it's a reopening of the Pacific Rim.
Oh, you think that's what this is?
Much bigger than that. China's the lead dog, and if China opens up, Pacific Rim opens up.
Xi and Biden on Monday. That's the next stop ahead of the G20. It's going to be a big focus next week, TK. Return to politics.
Amory will be there, traveling, not with the president. The president goes to Egypt. She will go to G20 directly, which I think is smart. And it's not just another G20 meeting because of China and the U.S.
Looking forward to the coverage. We've also got to talk about Ron, is it DeSanctimonious? Ron DeSanctimonious and the former president, Donald Trump. AMH is going to fill you in on that
Elon Musk-amonious.
a little bit later. We've got to talk about Twitter too. That's getting messy fast. Your equity market looks like this on the S&P 500, up 0.4%. Biggest one-day rally on the S&P going back to April 2020. On the Nasdaq yesterday, up by more than 7%. This morning, up 0.4%. In the bond market, Treasuries closed for Veterans Day, so we look to Bunds in Germany. TK Bunds right now up 9 basis points on a 10-year to 2.096%.
You did a deficient surveillance data check there, John.
What would you like?
Even you and I have to look at BitDog. 17,300 down $483 from the equity-linked surge yesterday. And I don't want to make any jokes about this, folks, because I think there's some huge financial and even human hardship involved here.
Without a doubt.
Where are we on Monday with Bitcoin?
I've got no idea. I've been asking the following question because it's an important one. There's a lot of people who still don't dabble in this asset class, don't own it, don't touch it.
You're looking at me.
I've asked the question of Peter Chi of Academy Securities yesterday. Can you speak to them? Can you tell them why this matters? Do we have the potential for contagion across traditional asset classes? Peter Chi thinks we do. He went one step further. He said he thinks this can hit the economy as well.
I don't.
He says it can hit consumer sentiment. He said it can hit the economy in a bigger way than people appreciate.
I'm going to get myself in trouble here. I did a technical analysis this morning on this, sort of inept. And the answer is it's not the ugliest chart I've seen, but it has some further south elements.
You calling your
to
technical analysis inept?
You can't do, John, the drift factor of Bitcoin is different than Amazon or the 10-year yield.
Sure.
And I don't think you can do legitimate linear technical analysis on Bitcoin because it doesn't drift like a normal asset.
Great lineup of guests this morning. I'll be catching up with Mike Wilson and Morgan Stanley at 9:30 Eastern Time around the opening bell. Don't miss that on Bloomberg TV. Joining us right now is Sarah Hunt, Chief Market Strategist at Alpine Saxon Woods. Sarah, Tom talked about Amazon. Can I just go through the performance intraday yesterday? Amazon up 12%, Microsoft up 8%, Apple up almost 9%, Alphabet up 7.5%. What did you make of those monster moves in yesterday's session?
I think a lot of it just has to do with how down everything has been and how much people were positioned for another bad CPI print and thinking that that was going to drive rates higher. Therefore, these big tech names take the biggest beating. I think they've really been beaten up, a lot of them. I think some of this was just on the back of, oh my goodness, we finally see what's going to happen to slow the Fed, right? I mean, everyone's been looking for this. This happened when the print came in August that was so negative on CPI. You had the market absolutely have a terrible September. And we've been looking for this, and I think because housing prices have been so elevated and rates have gone up so much, I was certainly thinking that that might not be such a positive print. I mean, positive, we're talking about positive, it's really high CPI,
sure,
right? But it's a relative game. So I was thinking that because housing prices hadn't come down but rates had gone up, that you would see even more shelter problems in the inflation side. It was up, but there were other things that countermanded it enough. And so I think it's just a relief on the tech side that if we see a path to them at least slowing or pausing, that you can start looking at these names again.
I don't expect you to have an answer for this. I'm much more interested in the process you go to search for an answer. The difference between a market turn, something more durable, and just a bear market melt up, a bear market rally melt up, squeeze, whatever you want to call it yesterday. What's more durable and what's something you want to perhaps fade and stay away from?
So the way I look at it for this year is I think that you've got most of the data points out of the way for this year. You've got through the election, it turned out better for the market, I think, than people might have been expecting in the sense of just a little bit of division, but not much, and maybe less political division, more to the center, which you guys were talking about earlier. If you think about four parties, there's two in the middle and two on the ends, and each one is two of its own. I think that helped a little bit, and I think what I worry about for next year, right, is so inflation starts coming down. So earnings were really good in Q3. Part of that was on the back of inflation. Higher prices, people raise prices. If inflation starts to come in, we haven't really taken earnings down next year enough. You've done it on a stock-by-stock basis in some cases, but I'm not sure that overall, if it's soft, I don't think consensus is down enough. So I think that you've got a glide path into the end of the year without a lot of data coming up, except if you get a very weird CPI print in December, because it could go higher since some things have gotten higher again, or you get some employment numbers that are so strong that people start to get worried that the Fed can't go slower at some point. But I think right now through the end of the year, it's probably okay. I worry a little bit about getting into next year.
Into next year, then, do you see a proportional decline in revenue growth because inflation comes in?
It's really going to depend on the sector, right? I don't think that the inflation in the energy markets is going to come off very much because to the point of China potentially reopening, that's inflationary, right? Because we've had so little demand from there. So I think there are going to be a lot of countervailing forces, and I think it's going to depend a lot on the sectors. But I just think that ability to raise price may not be as strong going into next year. And I wonder where margins are going to go because labor costs are still low right now.
I want to do a little history lesson here, and that so many of our viewers and listeners have a time that goes back to whatever. 10 years, 8 years, 12 years, whatever the distance back is. Yesterday had a feeling of 1975 when the nation was flat on its back, Pittsburgh was blown up, or 82. And I'm even going to go on the Ibbotson chart back to the Guadalcanal Low, the bottom of World War II in 1942. We're coming out of a pandemic, obviously a seismic political event, social event, cultural event. Did yesterday signal the kind of low that we remember when we look back decades?
I'm not sure that we started from a position that was low enough to say that. My concern would be that it's not like the equity market was flat on its back. Look at the last 2 years. Look at the chart of the NASDAQ. Now, you might have come down to a point where you can say, actually, if I go back, we're in a much more normalized level, but we're still not at the bottom of that normalized level. So I don't know what the answer to that question is because it's very hard to figure out exactly where everything should be priced. Here we go back to the question of if I can't price the risk-free rate, how do I price risky assets?
How do you?
The answer is we're still working on that.
Do you have more confidence about pricing the risk-free rate after yesterday, though?
I think you start to look at a place where you can go, okay, I can now start to see where we might end up, but I don't know how long you can stay there, which is what the Fed would like to do, because it's expensive to stay there. It's expensive for governments globally to have higher rates. And I think that there is some question about whether or not we're going to be able to tame the kind of inflation that we want to. And I don't know where we end up with that.
We've got time for one more question. A lot of people will be gripped by FOMO after yesterday's move, perhaps thinking about ditching energy and rotating back to big tech. That was yesterday's move, the underperformance, relatively speaking, in energy. You've been bullish energy most of this year. Why do you want to stay with that particular group of stocks?
There's definitely going to be some fluctuation in energy, but the reason I want to stay with them is because there's a huge tension globally between we'd like to move to alternative energy sources and we don't yet have the technology to move enough to alternative energy sources. If you electrified every car today, the grid could not handle that. So I'm looking at these assets not as stranded in the next 5 years. Longer term, we're going to be moving, but I think that there's been an underinvestment in the oil and gas space, and the demand for energy is not going away. We don't have a replacement for it. So I look at that as opportunistic when it underperforms relative to other things. And with tech, I still believe that tech's got a good story. People are going to pay for growth. Now, for companies that have to cut and aren't growing so much, like Meta right now,
sure.
What are you going to pay for that? I don't know. But in the end, you're still going to be paying for growth, even if what you pay for it isn't as high a multiple.
Some of these growth names have gone ex-growth. That's a
we
problem.
get through the show today without mentioning Meta, but we
did. Well, we didn't, but
it's my fault.
Sarah did. Sarah, thank you. Sarah Hunt of Alpine Saxon Woods. Tom,
Can I
great
go back
couple of
to my
days
thing?
in this market, sure. By all
Last
means.
time we talked about this, we did not have a bit debacle. Now we do. We have a Twitter debacle, and on and on. I'm going to go back to, as Sarah delicately mentioned, there's an interest rate now. We have a risk-free rate, and we're going to have a great zombie roll-up all into next year, where finally the adults take over. Profit matters, growth matters, your story matters, and you're going to see all sorts of combinations and transactions.
It's the D word, discipline. Discipline is back.
That's part of it, yes, absolutely.
And it wasn't there in the last 10 years in the same way. Discipline returns.
Single most important thing in James Diamond's letters at J.P. Morgan, I'm going to guess 5 years ago, he's devoted an entire letter just to hard work, and that's that discipline, John.
This will be a thing for us into year end and into next year.
Not for you and me, but for others.
This tweet just came in. No discipline here whatsoever.
Yeah.
You have to do a World Cup segment on B surveillance. I'm so up for hearing Tom Keene give his commentary on how his fave Tots player did something decisive in the end zone. Ferro TV, please make it happen. Out on Twitter just moments ago. We'll make it happen.
Doha bound.
I can't wait for you to talk about Harry Kane in the end zone. You ever seen Snoop do the Olympics? I think you doing the World Cup would be like Snoop Dogg doing the Olympics coverage.
Snoop Dogg?
Yeah. I think that it would be just as hilarious.
I don't know Snoop Dogg. Is that Disney?
Futures on the S&P at 4/10. This is Bloomberg.
Jonathan, get that solo apology camera shot ready. Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Well, Russia says it will hold its first nuclear talks with the U.S. since the invasion of Ukraine. According to the Foreign Ministry, discussions will be held late this month or in early December in Cairo. They'll focus on inspections of atomic weapon sites under New START treaty. The British economy shrank in the third quarter, making the start of what's expected to be a protracted recession. Gross domestic product fell 0.2%. Consumer spending and business investment both fell during the quarter. The Bank of England sees a recession persisting into the middle of 2024. It's a significant recalibration of China's COVID-0 policy that has isolated the country. Beijing has reduced the amount of time travelers and close contacts must spend in quarantine. It's also pulling back on testing. Plus, a controversial system that penalizes airlines for bringing virus cases into China will be scrapped. A stark warning from new Twitter CEO Elon Musk. Bloomberg has learned that in his first address to employees since buying the company, Musk said that bankruptcy was a possibility if it doesn't start generating more cash. Investors are already offering to buy Twitter debt for as little as 60 cents on the dollar. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Stepping down is an appropriate thing to think about. I support a more gradual approach of getting to it so we can be discovering the right rate as we go.
Mary Daly of the San Francisco Fed from New York City, rounding out a crazy week.
Can I just say she's my
favorite? You like Mary? I love
She's
Mary.
my favorite. They're all different.
I love her
and
too.
I'm sorry, John. Mary Daly is
She's
my
very
favorite.
kind. I was at a diner with her in Jackson Hole. She's fantastic.
Yeah.
Just a lovely human being.
Yep.
You can tell straight away.
But I think we have to emphasize with all the Fed blather in the coming days and recalibrating. I don't mean to interrupt, John, but let me interrupt. But, I'm sorry, each Fed president's different.
I thought that was just a default position for you.
It is.
Just to interrupt and bang your pen on the table. I'm going to do the price action briefly. Thanks for that. Equity futures up 1/3%. Monster move yesterday. Up more than 7% on the Nasdaq, up more than 5% on the S&P. Biggest move higher we've seen going back to April 2020. In the FX market, the move's absolutely wild. Euro dollar this morning up another 0.8%. Just short of 103 at 102.88. Sterling, though, I want to sit on this.
Please.
Cable, 117.57. That currency stronger by 1/3% on the day, the pound against the US dollar. Tom, look at where this has been. September 26th, 103.50 intraday.
Well, do we give credit to the Prime Minister?
170.
14 big figures up. And, you know, I can't remember the Brexit chart, but I believe we're at a level just above pound strength above a Brexit level of 116 is my guesstimate. But is this like good scores for the Prime Minister in his first days?
Two legs of this. The UK leg is that we clean up the mess of the last couple of months. Still got to do that. Still some work to do. The second leg of this is just the immense dollar weakness we saw yesterday. DXY, worst day since 2015.
Yes. Yeah, no question. 107
7 years.
now. 107 on DXY. But a lift to the equity markets. Right now, with Amory Horton, we're going to digress on the 14 different stories that are out there for our Bloomberg Washington correspondent. And we need to migrate forward 3 hours, where the President of the United States will go to the middle of nowhere in Egypt to COP27 and speak on climate. Anne-Marie, I'm going to suggest it's off the radar. Get us on the radar. Give us some help. Provide clarity on what President Biden would like to accomplish in Egypt.
Well, I don't think it's the middle of nowhere, Tom. It's Sharm el-Sheikh. A lot of people have visited this basically resort. But what the president is going to do is he's really going to recalibrate the U.S. stance and reaffirm their stance on climate. There's news out today that they want to really hone in on methane emissions as well. But this entire Sharm el-Sheikh COP27 has really had a difficult time in terms of balancing the needs of countries around the world. Higher inflation, higher energy costs at the same time that you're trying to transition. One thing that is clear, the big takeaway, and our climate friends wrote about it, calling it, quote, show me the money. It's the fact that the developing world is saying, if you want us to transition, you need to come to the table with the billions of dollars that's going to be needed, and that was promised to us. And that's what this COP is really about.
And, of course, there's a war in coal. I got 8 ways to go here, Anne-Marie. Let me stay on methane. So the president's going to talk about natural gas methane emissions and the production of oil, I guess, out in the fields. Great. Do the Republicans violently disagree with the Democrats on methane emission, or are they on the same page?
I think a lot of people want to see emissions being toned down wherever they can. Sometimes methane, it's clear, it's very hard to make sure it's not leaking, but there are leaks, and the president is moving a step further and trying to make sure on these wells and drills that you can control methane emissions. I'm not sure you're going to see a ton of pushback from Republicans on that specific issue. What you will see from Republicans on issues is if this administration continues to what they would call go after the oil industry and at the same time ask for more production. Maybe with a House majority being Republican, you can see a little bit more talk about permitting bills, a little bit more talk about what Joe Manchin, the senator from West Virginia, wants to see, which is making sure that coal jobs stay in place. Potentially, that's what you could potentially see. But I don't think they're going to go after Biden for making a climate speech at COP27. There was a number of people who, even in the Republican Party, who thought that the United States leaving the Paris Agreement under former President Trump was actually a mistake.
Anne-Marie, Monday. That's not the appetizer for the G20. That's the main event. It's Xi, Biden, sitting down together. What do you expect from that?
Nothing. We do not expect a joint statement. There is not going to be any deliverables. This is what U.S. officials are describing as a way for these two individuals to better understand each other, and they really want to get a map of the, quote, rules of the road. This is something the U.S. administration has been trying to do since 2021. They call it a floor, setting a floor for this relationship. So there's going to be no deliverables, but obviously potential fireworks when it comes to certain issues that are going to be discussed, like Putin's invasion of Ukraine, like what is going on in terms of the U.S. trying to harness some technology that the Chinese really want to get a handle of, like things like debt sustainability for the developing world, and then, of course, Taiwan.
The G20 communique. Can we sit on that for a moment? How on earth do 20 countries agree on anything right now, Anne-Marie?
And we don't even know if all 20 will be showing up. Obviously, we know that President Putin's going to be a no-show, really no surprise there. He didn't go to Rome either, and when the Rome was happening, he also wasn't invading his neighbor. So he will send Sergei Lavrov. Incredibly difficult at this moment, particularly given the fact that Russia is a part of the G20, given the fact that China has maintained and has not criticized Putin directly about the invasion. It is going to be a very difficult communique, and potentially there just won't be one.
Anne-Marie, thank you. AMH down in DC. Heading off to the G20. Safe travels, Anne-Marie. I think we'll catch up a little bit later on Bloomberg TV around the Open. Tom, I've asked the question as to whether this G20 communique next week, if we have one, will read like the Fed minutes. One country says this. A couple of countries say this. It's very, very difficult,
like
tremendously difficult to agree on anything right now.
I'm hugely biased on this, in that my childish view is Pittsburgh really mattered. And I only think the reason the G20 Pittsburgh meeting mattered is this is close to us. And Bali's on the other side of the world, and is American foreign policy, American international relations, Western international relations really going to pay attention?
Transatlantic relations.
Yeah.
I'm fascinated about the relationship between Europe and this White House, this administration, Tom. I think there's a bit of tension there that hasn't been spoken about enough over the last couple of weeks.
Yeah, well, and it's going to come out here. I mean, there's no question.
Between Germany and the US specifically.
Yeah, well, and what does the new Germany or the next Germany look like? I think there's some real uncertainty on that.
Look, we have said
1 year, 2 years.
a million times, it's not controversial to say this. They outsourced their security to America over the last several decades. They outsourced their energy security to Russia and their economic security to China. And they're still very close to China, Tom.
I just looked at the groups of the World Cup. John,
I can tell you're distracted.
United States, England, Wales, Iran. That's really exciting.
The United States, and I think the England game is it the Monday when we're on air at about 8 a.m.?
Well, we'll have to get,
So our 10 viewers go down to
It'll be
what?
Interesting to see.
We go from 10 to 2?
Yeah.
Great.
Absolutely.
Surveillance correction just on the football schedule, which is important for all of you, I know.
It is.
England-Iran is on the Monday, November 21st at 8 a.m. So maybe we get a bigger audience that morning. Perhaps not in London, but here in the United States. It is Black Friday, November 25th, where England plays the USA. Tom, at 2 p.m. Eastern Time.
Qatar, Netherlands, Ecuador, Senegal.
Is that what
just
you're
like
excited
a layup
about?
for
Is
Netherlands?
that what you're excited about, those games specifically?
But isn't that, who picks the brackets?
It should be.
Are they picked
out
out
of bowls.
like a Powerball out of a bowl?
Yeah, it was done a few months ago, Tom.
Okay.
I'm pleased you're on board. I'm going to whip through the price section briefly.
You're going to read in this weekend.
I'm sure about the Tots in the end zone. Someone messaged me yesterday and said that you might think that Tottenham was playing at the World Cup. And I'd have to explain to you why they're not. Equities on the S&P up a third of 1%. On the Nasdaq up 0.4%. Call it a third of 1% also. Monster moves yesterday. Biggest one-day pop going back to April 2020. That's the equity market. In the bond market, if you take a look at treasuries, and you can't right now because we're going to take a look at bunds, but treasuries yesterday. Let me finish.
Please.
Treasuries yesterday on a 5-year, down the most. Yields, down the most. Biggest one-day drop since 2009. Treasuries closed today for Veterans Day. So we look to bunds. Yields higher by 10 basis points on a German 10-year, 2.1%. Just historic moves yesterday, including in the FX market.
Yeah.
The dollar index, DXY, biggest one-day move. Biggest
And
day of
continues
weakness
today
back
is
to
the headline to me.
2015, and it continues intraday, Tom. We're negative more than 1%.
Yeah, it'll be interesting to see where the VIX settles coming out of Friday. John, very quickly here on Veterans Day, Armistice Day, with a 2-year yield close, I do think we have to manage. Could you imagine if I was managing or you were managing money? I mean, bring it up, folks. We were looking at 4.60, and John and I are navel-gazing up to 5%, price down, yield up, and we reverse, John, and go down to a 4.33 yesterday. I think
This
that's called whiplash.
This time last week, just after payrolls came out, the 2-year came really close to 480. Round it up, we were there. 480, all the way back down again.
Let's look at the bond market now. We're going to dive into that with someone with huge and interesting experience. Christina Kampman joins us, Global Debt Senior Portfolio Manager at Invesco. And what's so important about your work out of Villanova is you'd had a whole sales component in your career as well. Link portfolio strategy over to the conversations of positioning in sales and revenue production and all that, and with institutional clients after what we witnessed yesterday?
I think it's absolutely important. I mean, these markets and the way that they move, you can tell that there's this position cleansing in the market, and we keep seeing that. And that was always such a big thing.
Phrase, position cleansing.
I think that's what it was.
But I think the
Christina?
FX market is punishing popular positions, right? BRL, a lot of these LATAM currencies have been under immense pressure, even more so than broad FX yesterday. Kind of because those were such popular positions. Sterling, I think Sterling was a popular funder for people. It's under some pressure. But yeah, it's a big, the dollar turnaround here, and it's what we've been waiting for, right? Are we going to get this shift?
Is it more than that, though? Is it a position squeeze or is this a turn? That's what we're trying to work out.
Yeah, I think it depends on where we really are with the Fed, right? Like CPI yesterday is important. It's one data print, and it had across the board important components: OER, healthcare, goods disinflation. But it still is one print, right? Like we've had head fakes before, and I think Powell has told us we're downshifting, but we're not. This is not a U-turn in policy.
Well,
and all of the Fed speak yesterday came out and kind of echoed this. Like, hold on a minute. Like, it's a lot of financial condition easing yesterday.
It echoed from Fed official to Fed official. Yeah. And the question we're all asking now, Christina, is whether we can say that we've removed the potential for the terminal rate to be priced much higher from here. Do you think we have done that sufficiently?
Look, the market, the rally across U.S. Treasuries yesterday takes out the tail of higher rates. We think at a minimum, Fed funds gets to 4.75%, 5%. The market has taken out, with yesterday's pricing, any of the tail to higher rates. I think a little bit too much so, right? I think Powell told us many, many times last week during the press conference that his concern is inflation continuing to run hot, and they have the ability to tighten more, and if they don't do enough, that's a concern for them.
You've got this great blend of fixed income into FX. All of the focus, the navel gazing this weekend is going to be in the equity market. Is this the bottom? Is it the beginning of a bull market, et cetera? Can you say the same about dollar, weak dollar, or yield, where we finally migrate to lower yield? Can you call yesterday a bottom?
I don't know if you can call yesterday a bottom, and I think the markets are going to be choppy, and maybe in retrospect, in the dollar especially, like this is what we've been waiting for, the big turn, right? The dollar on a trade-weighted effective basis is at a 42-year high. Like it's at extremes on all levels.
What did you actually do yesterday besides check your World Cup bracket?
We reduced actually some of our duration position because U.S. duration tends at this point, if you expect terminal rate to get to 475 at 385, is that so compelling? It's less so for us, right? You're almost at 100 basis points inversion. A week and a half ago at 425, a lot more interesting. I think in the U.S. market, 30s kind of stand out as being a bit more interesting, especially versus their global peers. They've underperformed.
What did you do at the margin with cash, and what do you expect? Everybody bragging about having tons of cash. Where's that going to go over the end of the year?
I think fixed income, and I think a few people on your program have said it, like fixed income is now an interesting place to be. We're coming out of this multi-year zero Fed policy, zero global policy. Now you look at IG corporate, and we're yielding 6% versus 2.5% a year ago.
So you think cash will be deployed?
I think cash will be deployed, and I think people are getting more comfortable with days like yesterday deploying money into fixed income products.
There's a hope that this is a brand new world. In fact, maybe a return to the old world. Do you share that hope? And is that just the hope?
Look, I think as we look into 23, I think there's a lot of interesting and exciting things on the horizon, right? If we get some clarity and stability with the Fed, and again, it's not we need a massive easing cycle, and I don't think we have that in store, but if we have kind of some stability and Fed on pause, and we kind of know, even if it's a gradual tightening from here, the market can say, like, we can compress some of the massive levels of interest rate fall, and it gives people more comfort to put money to work.
Let's go back to your first finance class at Villanova. You're trying to figure out Sharpe ratio, Trainer, Jensen, all the rest of the risk-reward kind of analysis. Here we are in this hugely historic time, and we're seeing events. Twitter, Bitcoin, It's all the zombie companies getting rolled up into next year. How does that play out in the debt market? If we have, because of a new risk-free rate, if we have some form of zombie transactions and combinations into next year, how does that play out in your world?
Look, I think we've gone from a world where capital was free. And so for tech and for VC and the Teslas of the world, it provided a lot more opportunity out there. We're no longer.
It was a free lunch.
We're no longer in a world where capital is free, right? But when we look at the broad high yield and IG market, U.S. and globally, corporate balance sheets are a lot healthier than they've been. Like, again, from an IG perspective in the U.S., we're not worried about the health of corporations. If we look in Europe, the banking system we still think is sound, and you have AT1 paper that's coming as high as 10% in the market. Like, there's some interesting things out there.
It's a buyer's market, and we see that in the debt coming to market, Tom, to fund LBOs, leveraged buyouts. There's some real pushback from the market saying that's not good enough. We want this, and this, and this. And the reason I say, are we looking to 2023 and hoping this is the new world versus is it the new world? Because if you speak to fixed income, Tom, this is the world they want. This is the world they want, where Fed funds is maybe 4 to 5%. Discipline is back in the credit market.
Discipline is back in.
The buyers aren't abused by the sellers who can get away with anything. And, Krista, I'm trying to understand the difference between the world we hope and the world we've got. Which one is it?
Look, I think it's a combination of both, and I think it's going to play out coming back to the data and, like, where does the U.S. economy go from here, right? And it's on two hands. We have inflation that obviously has ramped up massively, and yesterday's a step in the right direction. We also have a very hot labor market, and the Fed needs to see some cooling there, and we haven't seen any signs of that. And if we don't, then the Fed continues to go more gradually, certainly, than this year, but they can continue to go next year. And I think that gives people pause and a little, and again, like, you have more cautious buyers, or you have higher standards as a buyer of what you're, when and what you're willing to put money to work.
Rick Reeder of BlackRock said he's excited about next year. I don't think I've ever heard Rick Reeder of BlackRock say that.
I believe you're correct. I've never heard that.
Are you excited about 2023 for someone in fixed income?
We are. And again, I think it's fixed income. I think it's foreign exchange. And again, if you get some clarity on the Fed, foreign exchange, I think, is the number one for us. If you get this turn in the dollar and the opportunity to be short dollars. But emerging market, local fixed income is also very interesting. You have yields almost 400 basis points above yields in the U.S. and above domestic market. And you actually have inflation running, in many cases, lower than developed market inflation. You've never
She's
had
too
that conversation.
The only way she can come here is when Bramah's
Let's
off.
put this conversation together with Kamakshir Trivedi of Goldman Sachs.
Yeah.
Some of these EM countries were the original front loaders. I think that phrase front loading has been lost over the last year with the Federal Reserve. I think the Federal Reserve hijacked that phrase. That was a marketing ploy to say we're front loading. They weren't. They were catching up. The original front loaders were in EM. They came out early, the likes of Brazil, hiking. The Fed was on another planet. Christina, this was fun.
This was great.
Thank you. Christina
Thank you very
Campbell
much.
of Invesco. And no World Cup questions. I'm sure you're happy about that. TK. Got any more on the World Cup? You excited about it? You doing reading?
Why does Wales have a separate team?
There we go. It's a separate country. Mind blown. They have a different language too. Mind blown again.
It's not a separate country. It's part of the United Kingdom.
It's a separate country.
It's like, does the Southern Italy have their own World Cup team?
No, they do not. They're part of Italy.
Then the World Cup team of Italy? It just looks great.
Okay. That was a low blow. That was a low blow, and you know.
Why does Wales have a separate team? Does Scotland have a World Cup
Scotland has a team, but did not get
Did
into
they
the World
not qualify?
Cup.
Okay,
Yeah.
I see.
Is that helpful?
It's exciting. I guess Gareth's on the team.
Yeah. It might be his final last tournament. Probably is. Before he becomes a professional
This is
golfer.
exciting. I still don't understand why they have their own. They're a separate nation?
Yeah.
Did Mr. Sunak get that memo?
He's aware.
Okay.
I'm sure most people in the United Kingdom are. Do you know the individual countries, Tom? England, Scotland, Wales, Northern
No, I know
Ireland?
Colombia, Senegal,
Nice.
Egypt, and Italy. That's the four
can't wait
nations
for
I
our
know
World Cup
today
coverage.
in the World Cup coverage.
Are we unveiling our World Cup
There
podcast
we are.
right
There
now?
we are. That's my coverage.
That is rude. Equity
I'm
futures on
sorry.
the S&P.
That's not bad form.
On behalf of 1%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The Biden administration is sending Ukraine more weapons and military vehicles valued at up to $400 million. The package includes Boeing's Avenger anti-aircraft systems. Weapons are being taken from existing U.S. stockpiles. A federal judge in Texas has struck down President Biden's plan to forgive student loans. The judge called it one of the largest exercises of legislative power without congressional authority in the history of the United States. The Justice Department says it will appeal. The plan is already on hold under an emergency stay from another federal court. The energy minister of Saudi Arabia says OPEC Plus will remain cautious on oil production. That comes weeks after the group made the Biden administration angry for lowering output. Prince Abdulaziz bin Salman spoke to Bloomberg at the Climate Change Summit in Egypt.
It's about being responsible and not to lose sight of what the market requires, the industry requires, which is market sustainable stability of the markets.
OPEC Plus meets on December 4th to decide whether to cut production again. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
As the market's risen since the end of September, people are still pessimistic, but probably not as much as they were at the end of September. So I think general pessimism, anything that's bad but not quite as bad as people expect, may be setting the floor under equities and risk assets.
That was basically a summary of yesterday from Patrick Armstrong of Plurimi Wealth. Got a message just moments ago on Twitter. Mad Welsh, Scottish and Northern Irish fans throwing things at TVs across the United Kingdom right now. It's the price action on the S&P for you. Good morning and good afternoon to you all as well. In the equity market, we look like this, up 0.5% on the S&P. Just a bullish recipe for the week so far. Gridlock in DC, maybe. Downside surprise on CPI, that's what we got. And then China. A signal from China that they're willing to soften their stance, Tom, on COVID zero. That's the takeaway this morning.
This conversation on his Friday evening is so important, and we are very advantaged at Enda Curran, our Chief Asia Economics correspondent, can stay up late on his Friday to brief us. And I got 8 ways to go here, but I've got to go to the immediate news. Who are the science advisors advising Beijing on a COVID shift?
They've got their top scientific commission, just like every other major economy, Tom. And what they're feeding through now is that there needs to be a more targeted scientific approach to combating COVID. And that's why they've come out with this 20-point plan today that on the one hand is about easing the international cutoff of China. So there's going to be shorter quarantine for international arrivals, an easier testing regime. And for example, the flight bans will be done away with. Those were particularly troublesome. And on the ground, there's a change to the testing and quarantine procedures as well. The point is that it's still obviously a broad brush approach. It's still very aggressive compared to the rest of the world. But relative to where China has been and their language and their messaging in the past few months, that there wouldn't be a change, this does represent a pivot.
With all your reading and in your reach to Chengdu and beyond, is there any ability to have mRNA vaccines of some form, Western American science, exported to China to help the Chinese people?
Well, this was a discussion that was held when the German delegation recently went to Beijing. There was discussions over the licensing and the use of the BioNTech vaccine. Fosun already had the license to produce the mRNA vaccine. I mean, there is an option. There is an optionality for China when it comes to the Western vaccine. But it must be said that Sinovac and the other vaccines they have, while they haven't been as effective, they clearly have been proven to be safe and somewhat effective. So clearly, China have been comfortable to rest on those as a crutch. The real problem they have with vaccines is that the elderly population remains under-vaccinated. And this is a big, weak Achilles heel for them, because it was the same story in Hong Kong. We had an elderly population under-vaccinated, and then that section of the population took a disproportionate hit when we had our big outbreak. And by the way, Tom, a lot of people are saying Hong Kong is a petri dish for the rest of China, because a lot of the measures that are being relaxed in mainland China now are the kind of measures that we were relaxing over the past few months, like flight bans, changes to quarantine, changes to testing, etc. So there is a view that what's happening here could be a bit of a trial for how China eventually pivots out of its COVID zero.
And a simple question, how has an authoritarian state struggled to get the elderly vaccinated? How's that happened?
I haven't heard a good answer to this one, John. I've heard lots of people questioning why China's vaccination rate isn't at its peak level. There are views that there are cultural and conservative norms when it comes to vaccinating the elderly population, just as there have been in other parts of Asia, by the way. It's not just mainland China, but nonetheless, it is a gap. And also, of course, you know, in vast China, there is still a health infrastructure that remains a long way off the standards seen in the rest of the world. There was a university report earlier this year that warned of potential millions of deaths if the virus was to spread unchecked. So, I mean, there are good public health reasons why China has been trying to control this virus. I mean, that needs to be said. But nonetheless, they've reached a point now where the virus outbreak is at its highest in 6 months. Just beside us here in Hong Kong and Guangzhou, big outbreak underway there, very heavy restrictions. They know that's hammering the economy. Surely they must know politically they need to navigate their way out of it. And this seems to be a suggestion now that they are trying to figure their way out of it, even if they still have a long way to go.
So markets are trading on the signal. The signal and the context. To your point, they've softened their stance at a time when COVID cases nationwide are at 6-month highs. I hear all that. Other people this morning, Ender, might just look at the shift and say, you know what, this is not much. The current rules were 10 days. Then the changes mean it comes down to 8. And what do you say back to those people? Is this just the start of something bigger? Is the scope to move even further from here?
Oh, I say that's a fair point, John. I mean, the point I'm trying to make is that relative to where we were, the language in the state press and coming out of the party congress, etc., was no lying flat, no change on COVID zero at all. And yet now they have made these changes, even if they are incremental. And it does underscore how far they have to go to get back to the level of normality China was at before the crisis. So there's a bit of something for everyone. You can call it a pivot, right? You can be bullish in China's economy, or you can say, look, it's a reminder of how far they have to go.
And very quickly, one final question on economics. Can we begin to frame out a more buoyant Chinese GDP? Can we go from the gloom of sub 3% real GDP out to something more China-like?
Well, some signs of bottoming in the real estate market this week, more government support coming into that sector. Tom, if this COVID zero strategy continues on this trajectory, not hard to imagine a more upbeat conversation on China as we head towards the National People's Congress in March.
And wonderful to catch up with you, sir. And thank you, as always, for staying late into the evening for us over in Hong Kong. The brilliant Ender Curran there, the Chief Asia Economics Correspondent here at Bloomberg. I just pulled up the ECFC screen on the Bloomberg for you all. Just a snapshot of estimates from the people we track here at Bloomberg for GDP in China. Here's the number, Tom, for 22, 3.3%. And for some, threatening to break down to a 2 handle, looking out to next year, 4.8%.
Yeah.
The real test of these changes, let's see what the economists do when they model out growth in China. Does it go from 3 back towards 4?
And it directly affects the United States and the Western world. And what's interesting is if you get that 4.x statistic you just gave, if that happens sooner, do you get the explosion like what we saw yesterday? And frankly, we continue to see this morning.
What's more important, Tom, from your perspective? The supply side shift you get from China reopening, or the demand side shift you get from China reopening?
I don't say this on air usually, but no one's listening on a Friday. Guess what? Supply side is what I'm focused on.
The likes of Apple?
I'm focused on, it's a type 2 construct. It's not that I'm focused on the supply side. I think demand side dynamics right now are too iffy. I've got to look at the concrete facts of supply side healing. Liz Ann Saunders at Schwab has been way out front on this.
Seen that move on dollar China today?
Yeah.
A 1% move.
And you look
China's
CNY,
favor.
CNH, and it's germane. The market's dragging the fixing rather of CNY forward. I just got to talk about this because I'm ignorant. Like France won the last time around, right?
They did, yeah.
And the pundits are saying they're like since 1962. I think that's 60 years ago.
Sure.
Was the last time there was a repeat. It's feasible, right?
You mean back-to-back wins?
Back-to-back wins.
You think France could do it?
John, who are you talking to?
My favourite this year is Brazil.
Why?
My favourite last time around was Argentina. I think they finally got a full, more complete squad.
Is it Neymar? Am I pronouncing
you
that
see?
right?
You see?
And he's on Brazil.
You've been studying, haven't you?
I'm up all night. I got
just
a beverage of my
crushing
choice in my hand. I'm going, wait, why is Wales part? Why is
You're killing me. Don't go there.
Why isn't Gareth
Don't
playing
go there.
for England?
We're going to get some real complaints if you go there. Don't upset the Welsh nationalists, Tom. Equity futures positive.
I'm Welsh.
This is Bloomberg.
I think we're going to probably get hawkish rhetoric out of the Fed for the coming few months.
The Fed needs to see more to say we can decelerate then from 50 down to 25 and ultimately pause at some point.
Sure, we should get lower volatility, but I think we need to see the Fed plateau at least before that's going to happen.
There's a terminal rate problem in the equity market. In other words, we have no idea when the Fed is going to stop.
One has to be careful about losing sight that it still remains a long way back to 2%.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City, rounding out a trading week that has driven us all crazy. From down to up and up again and up and away in yesterday's session. From New York City this morning, good morning for our audience worldwide, live on TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Bramo taking a day off because the bond market is closed for Veterans Day, but this equity market is wide open for a big rally in yesterday's session. And Tom, a little bit of positive follow-through this morning.
The positive follow-through is not what I would call the vector, the ascent, the angle that we saw yesterday, but still, it's stunning to see. It'll be interesting to see how VIX 23.57. John, in from 32. The Yanks, my benchmark there's the Yanks was 32, and the equity market's in 23.57. But what's important, and we're going to do this for Global Wall Street, the next half hour is critical here on surveillance to get you set for the weekend. And what's important here is taking the equity blather and bringing it over to fixed income and particularly to foreign exchange.
We'll do the size and scope of the moves over the last 24 hours. But if you came into this week and you were an equity bull, and you wanted three things, I'd argue you've maybe got 2.5 of them. Gridlock in DC, almost there. Right?
Yeah.
1. 2, downside surprise on CPI, got it yesterday. 3, you wanted a concrete sign that China was willing to soften their stance on reopening. You got that this morning as well. That's why we're seeing this massive move we've seen, Tom, through much of this week.
And you see it expressed. We've underplayed this today in Brent crude, round at $96 per barrel. I had $97 round up earlier. The answer is as you say, John, there were 3-4 international events that have linked in here to the optimism. I thought Sarah Hunt was incredibly articulate on that in the last hour.
It's the follow-through today that gets my attention. Let's take the dollar index, DXY. Worst day on DXY going back to late 2015, 7 years, December 2015 to be precise. This morning, Tom, down 1.2% on the dollar index. Some real follow-through from yesterday's session.
More than I expected, and there's individual stories there. I think the trap here, Mark Chandler at Bannockburn's very good on this. Don't look at blended indices and that. You've got to really go granular and look at the pairs. Japan leading, but that's still such an idiosyncratic story.
Hey, dollar yen, biggest move back to 98. Cable, biggest move back to 93. The Aussie, biggest move back to 2011. Did you expect to move that large? I asked this question earlier this morning.
No, I did not.
If I had a crystal ball and told you exactly where CPI would come, where it would print across the board yesterday, with precision, would you have guaranteed me the kind of move we got yesterday? No way.
Not the magnitude.
7% on the Nasdaq.
The vector. I would have said the vector.
Direction.
And I would have said direction,
Sure.
jump condition, yes. But the magnitude of the move, and again, I'll go to this witness. What was Amazon up? 11, 12%?
Something like
it's
that,
the gloom that's out there. There's nothing gloomier than Amazon right now. He's going to do a complete reorg, which he's leading. And the bottom line is, John, all the stuff that was gloomiest came up strong.
Amazon up 12% yesterday. Microsoft up 8% yesterday.
Right.
Apple up 8.9% yesterday. Wild moves.
I'm going to start with the data that's not open on this Veterans Day, this Armistice Day, as we look to World War I, 11 a.m. of November 11. John, the U.S. market not open, 4.33% two-year yield on the close yesterday. You and I were whispering less than 18 hours ago of 5% yield. We're 70 beeps away.
Back to wait. Have we removed the tail risk of a much higher terminal rate from here off the back of one CPI print? Can we flip the story back to where it was on December 13th when we get the next CPI print? If you listen to the Fed officials yesterday, Tom, I would say they're still very cautious about doing any kind of victory lap or anything that would be seen as a victory lap after yesterday's inflation data.
We'll have to see. There's the data. John and I will touch on that through there. Thanks for the World Cup comments as well. We're having fun diving into this. We look for our team coverage from Doha here. When's it start? Monday?
2 Sundays away.
2 Sundays away. Distance away. This is a joy, and we did not set ourselves up with a massive market move to have in the studios Elsa Lignos, Global Head of Foreign Exchange Strategy at the Royal Bank of Canada, RBC. She attends from Europe, where she is definitive on the linkage of ECB dynamics with the foreign exchange market. Let's start right there, because I've had a real dearth of euro analysis. What is your call on euro, given the last 24 hours play?
So it's a really interesting moment and actually slightly painful for me because I went long euro dollar a couple of weeks ago, got stopped on a little move lower, and now pretty neutral and watching this rally. But I think yesterday's CPI actually gave a lot of people a green light to do something they wanted to do already. For me, what was striking was listening to our head of spot in Europe and our head of spot in North America ahead of the number, talking about what they were going to do. I've got to say, the difference in opinion between Europe and the US is incredible.
What shaped it?
People in Europe really think we're near the end, right? And they've been waiting to play that, and this CPI was kind of hanging over them. I think even if we'd had an inline number, we would have seen people selling USD.
Is that because the news has been better in Europe relative to expectations? What is it?
Not at all. I think people are just so itching to see the end of this Fed hiking cycle. And maybe there's just more doom and gloom. Maybe there's just more pessimism about the state of the US economy than I think you feel here, right here in New York City. But it's the difference in opinion between Europe and the US at the moment, I think, is the biggest I've ever seen.
You mentioned earlier you were stopped out, which is jargon for some people. You set up a trade, you believe in stronger euro. It comes back, you're forced out of your trade essentially, and you're on the sidelines. How much of the market is on the sidelines for this weak dollar moment?
Exactly. I think there'll be a lot of people in that position. And heading into year end, people who've had an incredibly strong performance on the back of being long dollars are now scrambling, thinking, okay, do I take it off? I had a lot of conviction in this trade. A lot of people I spoke to earlier in the week were convinced we go higher in 2023. And I think there's a lot of FOMO in the market right now. People, whether in the equity market or in the fixed income market, FX, trying to get
How does FOMO express itself in foreign exchange? I think our viewers and listeners are like, really? Are lunches longer in London when that happens?
You know, more than anything, it's the fact that FX is so liquid, you can put on big positions quickly. And I think it might be an easier way for a lot of people to reposition their portfolios. Hence, we've seen this size of the move.
You did that at Claridge's a couple of years ago. You were at lunch at Claridge's.
I wish.
Boom, you put on that sterling trade.
How would you reset this morning?
So look, the trade I've been looking at, which I actually really like, is across long euro sterling. So buying the euro, selling the pound. Not because I'm from the UK and just very gloomy about our prospects, but I think you've kind of got to strip the dollar out of the equation at the moment. We still have another CPI print before the December FOMC. We had a bit of a head fake earlier this year, August, September CPI. So I've got to be honest, it's a great move if you caught it. And had I been in 2 weeks ago, I would be riding it now. Today, I think it's a little harder to buy euro dollar at these levels. I like long euro sterling.
So is that a positioning story? Is that fundamentals on the euro side? You said it wasn't just pessimism on the sterling side. What is it?
So what I find really interesting is all the investors I speak to, nobody's actually positive on the euro. People might be bullish euro dollar because they're bearish on the US dollar, but nobody's positive on the euro. And it's not that I think cyclically Europe is looking great. A lot of people worry about 2023 and the winter there, how we're going to get through with gas inventories. What I think is really interesting is European investors potentially repatriating money back home. And if we start to see that in size, you could get a lot of euro buying from that domestic shift in assets.
Where's the EM trade right now? Where's the opportunity for a number of big figures profit in the EM?
Well, you touched on crude earlier, Tom, and I think we're seeing some really interesting moves in commodity markets. And the commodity
Whoa, wait, stop. What she's saying there, folks, is she has Halima Croft to help her out here. Link Elsa and Halima together. On the Halima Croft oil trade, what do you do in foreign exchange?
Exactly. So we really like the Mexican peso, have liked it all year. Still think that has a bit further to run. Brazil's tricky at the moment, given the finance minister.
In the World Cup. I mean, Brazil's a real uncertainty in the World Cup
well, drum roll. Let's do the World Cup right now. The heartbeat of foreign exchange worldwide, City of London. What on earth is going to happen to volumes in London in a couple of weeks? Off a cliff?
You know, heading into Christmas, it always gets a little bit quieter.
Can you imagine how much worse it's going to get? Imagine how much worse it's going to get.
Well, we'll have to wait and see.
TK, nuts.
Dollar Mexico, 20. I remember when it was a barometer for American politics.
Sure.
19.43. How many big figures can you make here strong Mexico?
Well, I think what's interesting about Mexico is really the carry that you pick up. And I think that's why a lot of people have bought it. It's not so much the spot move, but it's the fact that you get that very positive real yield, particularly if we're now pricing in lower yields for the U.S.
I know you've been traveling, but we'd be thrilled to have you in Doha for our World Cup coverage.
Wouldn't we love that? Have we got that sponsored yet? Is RBC going to sponsor
RBC,
that?
I think, is all over it as well.
Make that happen.
Halima's, here's Halima calling right now.
Laurie Cavacina's dialed in too.
Yeah, she could, we could do an
so
RBC.
Thank you. Brilliant team at RBC. Just awesome.
Well, yeah, this is the heritage of Wall
Tom
Street.
Porcelli in the mix as well.
Who?
Mr. Porcelli.
Oh, yeah, okay. No, it's true. Every house is different, and the Canadians, they get underplayed a little bit in the American media. It's just baloney. They're strong, and RBC is particularly strong in London, led by Ms. Lingos.
I also know that Dave Mackay listens to this show, so Dave, if you'd like to sponsor a trip to the World Cup,
I just think,
hey, Dave, you know where we
team
are.
surveillance coverage.
So thank
daily.
you. We appreciate it. I mean it, Tom. London trading volumes.
Oh yeah, yeah. I can. Even I know that.
Going into Christmas off a cliff with the World Cup on.
For your weekend consideration, Daniel Ives. Thank you, Dan Ives, for joining us from Wedbush here on a number of themes this week. Twitter, a money pit. I saw $4 million a day is Mr. Musk's working pit per day.
It's getting harder, not easier. I listened to that Spaces talk on Twitter with Elon Musk and a couple of
Did you?
executives
I did not.
a couple of days ago. You had every brand under the sun listening to it as well. Interesting to follow. Following day, what happened?
Now, do I lose my
Two of the
fancy
execs
little
left.
blue thing this weekend?
No, I think.
Do we know?
How does that work? When do you have to start paying
I don't know.
for it?
I don't
have you
know.
noticed that official is back under official brands now? We'll talk
I
about that in a
missed that.
moment. It's been a mess the last couple of days. Ben Laidler has been looking for this squeeze for a while. From eToro, who joins us next. I'm looking forward to that. I know you are too, Tom.
Yes.
Coming right up, equity futures higher after a monster move yesterday. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Justin Sun's Tron is ready to provide billions of dollars to rescue ailing crypto exchange FTX.com. Sun spoke today on Bloomberg TV.
Right now, I think the most important thing is still we need to do a full due diligence, and at the same time to evaluate the situation, to have a full picture of like what's going on, like how serious is the liquidity crunch. So basically, once we get the full picture, I think we will start to making moves.
FTX currently has a shortfall of as much as $8 billion. Russia says it will hold its first nuclear talks with the U.S. since the invasion of Ukraine. According to the Foreign Ministry, discussions will be held late this month or early December in Cairo. They'll focus on inspections of atomic weapon sites under the new START treaty. The British economy shrank in the third quarter, marking the start of what's expected to be a protracted recession. Now, gross domestic product fell 0.2%. Consumer spending and business investment both fell during the quarter. The Bank of England sees recession persisting into the middle of 2024. And a new problem for Twitter and owner Elon Musk. There's a growing number of users impersonating major brands, such as Nintendo, Eli Lilly, and Musk's own Tesla. Twitter has now reinstated so-called official badges for those high-profile accounts. The badges had been rolled out earlier this week before being withdrawn. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
There's, some evidence that we are moving from peak inflation down lower. Where do we end up? I think is the big question. Our terminal rate has been at 4.9%. I think that still seems like a reasonable view at the moment.
Matt Lazzetti, just absolutely brilliant. Going into the CPI print and at the other side yesterday, joining us from Deutsche Bank. Live from New York City, your equity market. What a brilliant run over the last 24 hours, up by more than 5%. On the session yesterday on the S&P, biggest move since 2020. On the week now, a raise in the losses and also up by about 5%, heading for the best weekly gain on the S&P since June 24th of this year. In the bond market, Treasuries closed for Veterans Day. Remember that. In the bond market, yields are higher by 10 basis points. Bit of a bounce back from yesterday's major move lower for global bond yields. 2.11 right now on a German 10-year. And in foreign exchange, euro dollar back to 103. Tico, we reclaim 103, and we talked about the follow-through, the dollar weakness yesterday that dominated the session, the follow-through into today's session. Again, euro dollar with a move of 1%.
In the move yesterday, I said to the team, all that matters is Ben Laidler. Why is that, folks? Let's go back to December 24, 2018, one of the greatest calls in equity market strategy, the modern times. Benjamin Laidler of HSBC says, shut up. A bottom's in. He absolutely nailed it with eToro today and their global market strategist. He has published this morning the bottom is in. Ben Laidler, is this like Christmas Eve of 2018?
Yeah, it is. I do think the bottom's in for a lot of reasons. I think earnings are hanging in there. I think sentiment's very poor. Valuations are low. We've got wild cards like China improving. And now, crucially, the inflation fever is sort of beginning to break, and that's giving us some visibility on the top of the cycle. That's not enough to get us off on the next bull market, but it's absolutely enough to tell us that the bottom's in. So I think that's a similarity with 2018. The difference is that then it was a V-shaped recovery. This, I think, is going to be more like a U, but this is absolutely the necessary first step. And, we learned a lot of things yesterday. One of them was you've got to be in it to win it. So I do think, investors need to be in this market.
Ben, what is the character or the human behavior of those loaded in cash? There's a lot of cash out there right now. I have prospectus portfolios of 5%, 4% who are in 7% cash, etc. How will cash respond?
Yeah, tough to criticize that. I mean, it's been a historic year for the failure of diversification. Basically nothing's worked apart from cash. So I'm sympathetic, but we're going into the end of the year. Historically, the best seasonality of the year. You can pour cold water on that, many times, but I don't think you can this year after such a historically bad year across all asset classes with so much cash on the sidelines and looking forward to a less bad 2023. I think those are the ingredients for Christmas continuing to come early.
Ben, there were some curious moves yesterday as well. A lot of people picking on, say, a company called Carvana, which operates an online platform for buying used cars, running more than 30% on a CPI print that showed used car prices absolutely plunging. So, Ben, can you help me understand the moves that I should get on the train with and the ones I should avoid?
Yeah, I think that's a reflection of valuation relief, lower bond yields, and just, just how aggressively underweight a lot of people are. So, where do you get the biggest bang for your buck? Where do you get the most leverage? The stuff that collapsed the most, where valuations have been under the most pressure. That's what you saw some relief from yesterday. That doesn't mean you should chase it. I still think, this is a market where you want to be invested, but you want to be reasonably defensive. It's going to be 2 steps forward, 1 step back. I mean, we may have seen the peak of inflation, but I do think it's going to be a bumpy on march down. So, stay in those defensives. And as we get some more validation that inflation just continues to come down and, we get to the top of that Fed cycle and begin to look to sort of cuts later in 2023, you just keep adding risk. And risk is probably bigger tech and traditional rate sensitives like real estate. I'm not convinced by the sort of disruptive tech names, at this point, even though that's what led the rally yesterday.
Let's talk about leadership. You touched on it. You're calling the Santa rally 2 weeks before Thanksgiving. Christmas has come early. Let's build on that. The tech names that you do want to own, Ben, and where you're starting to be encouraged by some of the work that's being done by the C-suite. We've seen cuts at places like Meta. We saw a report from the Journal yesterday that Amazon was getting in on the cost-cutting act as well. Where do you want to be? Where do you want to avoid?
So I think it's a bit of a barbell. As I say, right now, those traditional sort of value names, I think they continue to do well, right? Both on the defensive, the sort of healthcare names, but also some of these sort of depressed banks. But I think looking forward, I think next year is going to be very different to this year. This year was all about massive valuation deratings and earnings holding reasonably firm. I think next year is the opposite. I think earnings are going to come under more pressure, and you're going to get some valuation relief. I think that's a much better environment for big tech with these dominant market shares, these big margins, these strong cash flows, fortress balance sheet, and valuations have already come down a long way.
So, Ben, final question then. You're calling for rate cuts in 23. What's behind that call?
Rate cuts at the end of 23. I think markets are going to start discounting that, reasonably early. I think you look at every inflation lead indicator. There's not a single inflation lead indicator that's not meaningfully off its highs at this point. Across housing, labour markets, car prices, inflation expectations, commodity prices. I think that's going to continue to move in our direction through 2023. That's going to take a lot of the pressure off the Fed. And we may get I think the question is, how quickly do we get those rate cuts? I think we're looking for an extended pause. As long as inflation numbers keep drifting down, I think the market's going to start discounting cuts later in 2023, reasonably early.
A better week for Ben Laidler of eToro. Ben, thank you, sir, as always. TK, I remember the call as well from 2018. It was a monster call on the equity market. This call now into next year, the doubts around Fed rate cuts, not a single Fed official wants to endorse that right now. They do not want to signal easier policy because they do not think the battle is won. And
John,
you look at the data, Tom, the battle's nowhere near won.
They and we are data dependent. We ran into data dependency yesterday. I mean, let's look to next week. We're all going to read over the weekend, reset, recalibrate. I'm triple leveraged all cash. Yesterday was brutal. You got Michigan today. You do get some PPI inflation song and dance on the 15th. There's actually, because of the the quiet here, we're capacity utilization, industrial production. There's a lot of stuff coming out, including in the housing market. And to push against the optimism, explain to me what shelter does in the next inflation report. There's no way you can model that lower.
It's too difficult. So the end of the year is basically the first couple of weeks of December. The 2nd is the payrolls report. The 13th is CPI. The 14th is the Fed.
Yeah, and then you and I are off from the 15th on, right?
I hope so.
I think so, yeah.
Did we get that approved?
Yeah, I got that memo yesterday.
Okay, so we just walk away after that news conference.
Yeah,
with
we
Chairman
do,
Powell.
and
Does Lisa know?
Yeah, she's part of it. Absolutely.
Did Lisa approve it?
Yeah, I think so.
I'll check in with Brammo.
How's Brammo off today?
Because the bond market's closed.
Oh, okay.
That and she thought you were incredibly rude yesterday about my accent.
Hey,
she
come
was
on.
she
Joe
was really
Coy,
upset about
Madison
it and
Square
walked away.
Garden killed it with the British accents last night.
Did he?
He did. I had no idea what he was talking.
Let's wrap up this trading week. 60 minutes to go until the opening bell. Equity futures right now positive by 0.5%, building on yesterday's gains on the S&P 500. Futures positive by 0.5%. Equities up yesterday by more than 5% on the S&P. On the Nasdaq yesterday, up by more than 7%. The dollar weakness continues. DXY yesterday, worst day going back to December 2015. Today, dollar weakness again, DXY negative 1.3%. You've got euro dollar positive by about 1% at 103.11. These are big moves. And crude, looking to get back to the 90s on WTI. $89.12, up by more than 3%. Off the back of a nudge in the right direction from China, Tom. Reopening.
Nudge is correct. Very
just
accurate.
Softening the stance on reopening. And if we work through it, the current rules for quarantine are 10 days. The changes basically mean you go to 8. But it's the signal you get from the current context. They're doing this at a time when COVID infections in China nationwide have been surging to a 6-month high. So it's the signal that people run with this, Tom. The idea that this administration, this government, is ready to step away slowly on the margin from COVID zero. If you frame it in that way. For other people, Tom, it's just a move from 10 to 8 and it's not a big deal.
I would frame it through the afternoon. It's fascinating to see how we follow on here in the different markets, equities, bonds, currencies, commodities as well. John Ferro and I are committed to a global stance as we go to the World Cup. And now, representing Denmark, who is in the World Cup, Torsten Slok joins us. He's chief economist at Apollo Global Management. Far more than that, his leadership in economics with Peter Hooper at Deutsche Bank over the years and going over to the dark side. What was the change like going Deutsche Bank to Apollo? I mean...
What do you expect him to say right now?
On a given Monday, when you walked in the door at Apollo from a major bank with your major success there, what was that like?
Well, my job is to watch the economic data and watch financial markets. And with that backdrop, that's really the same thing I do today.
Same old.
Well, talking about inflation, unemployment, the things that you guys talk about. What's going on? Are things getting better? Are they getting worse? Are the central banks going to react differently? The job is really very similar.
Very good. How important is the next inflation data after the festivities we saw yesterday?
I think it's very important because what I think is the key issue at the moment is the sequencing of hitting the Fed's dual mandate. So what that means that is yesterday we got confirmation that we have seen now inflation come down from the peak in June without an increase in the unemployment rate. That's, of course, telling you that we might actually have a scenario where we could have a soft landing because we are now seeing inflation begin to come down. Admittedly, 7.7 is still very elevated, but at least it's coming down without the feared increase in the unemployment rate. Because the Fed's dual mandate, and Jay Powell has been very clear about this, we need to see a softening in the labor market, and we have really not seen any meaningful softening. So the sequencing happens to be in the right way for markets, namely, first inflation is coming down without even seeing an increase in the unemployment
Let's
rate.
explore that further. So we may have seen peak inflation year over year. Where does it bottom out at next year?
So obviously, there's a very long road. If you compare with what happened in the mid-1970s, it took 2 years in 1974 to get inflation back from the peak to where it was before. So if it also takes 2 years, then of course we still have a very long road ahead of us. And that, of course, could be associated with all kinds of shocks, including, of course, not only geopolitical shocks, but also to commodity prices and other parts of the CPI complex.
This is hard to predict, of course, but is there something about the nature, the characteristic of this inflation story that means it will be difficult to go back to the low inflation of the previous regime?
Yeah, so there's a number of arguments why you could have inflation potentially higher in the long run. First of all, you have, of course, demographics and immigration that looks quite different now. You had very little immigration during the pandemic, and also the demographics also suggesting that we could have a more permanent upward push on inflation. You also have that deglobalization, that if there is less globalization in the future, that's also going to imply that the stuff that we buy in stores and that we purchase will of course be more expensive. And finally, technology might not be contributing with as much productivity growth as it has done historically. So that is all arguing for that there might be some structural pressures. But it is important that the reason why inflation is high at the moment is probably also very importantly for cyclical reasons. So yes, as you're saying, John, we need to get down with inflation towards 2, but it is certainly a long road we have ahead of us.
Do you aggregate your economic analysis, or as you mentioned, technology? Are we now a polarized America, a polarized Denmark, a polarized world of the technology haves and the technology have-nots?
Well, the main implication of that, of course, is what impact it has on inflation. So, of course, one very important debate is when you invest, for example, in renewable energy. That's, of course, a big debate about is that inflationary or disinflationary? Because all investment, all CapEx spending should be disinflationary. So in that sense, there's some very important differences across the Atlantic Ocean in terms of what is the investment outlook for the U.S. relative to Europe across the board.
This goes on capital deepening. Dominique Constant-Mazouz has been very good on this. The idea that there's some things going on post-pandemic, supply side, demand side, and all that. But are we seeing a capital deepening that I would say is invisible almost right now?
Well, at least we're seeing very significant capital deepening in the energy transition. And that's, of course, very important because that's ultimately the goal with that is to lower energy prices, which ultimately should be disinflationary for inflation. But it's true that this is certainly a very important theme also for the long-run outlook for inflation. But I would still say that in the near term, the inflation outlook is mainly driven by the cyclical drivers of inflation, namely the risk that the U.S. economy is overheating. And that's, of course, the whole reason why the Fed is raising rates in an attempt to try to cool things down. And they haven't really been very successful at cooling things down. They've cooled down the goods sector or the interest rate sensitive components of GDP, but that's only about 20% of GDP. The service sector, airlines packed, hotels, restaurants, concerts, sporting events, it's all packed everywhere.
The shelter conversation, a big piece of this as well. You mentioned the sequencing. Can you compare and contrast the sequencing you're talking about in America and what you're seeing to what you're also seeing develop in Europe? Because we both sense a different story there.
Yeah, that's very important because in Europe, you're actually seeing inflation is still going up. But economic activity is starting to slow down. In fact, if you look at your Bloomberg screen, you will see, of course, consensus expects that both Europe and Germany in particular will be in a recession next year. So the conclusion is, of course, that if you have a very different situation in Europe where it's just going to take a little bit longer before you begin to see inflation come down, then it becomes a debate about, well, is it the case that inflation is going to stay higher for longer in the US or in the euro area?
Stagflation in Europe? Base case now for you?
At least today, it looks like Europe is facing a lot more headwinds than the US because Europe, unfortunately, is facing inflation that's at a higher levels. There are some very important issues about that. The composition of inflation in Europe consists more of energy. About 2/3 of inflation in Europe is energy and only 1/3 in the US. So if energy prices, once we get to the other side of February 2023, once we get to the other side of Russia's invasion of Ukraine, the 12-month window will begin to no longer take into account the big spike that we had in energy prices.
Base effects kick in.
And that's exactly when you begin to see European inflation potentially coming down a lot harder. So that's why in the rate space, there's a lot of debate, of course, about bunds attractive at these levels if European inflation is potentially coming down very, very quickly once we get into the second quarter of next year.
So are you, in summary, an optimistic tone for Apollo management? Are you telling them that transactions can be a benefit now? Or are you telling them to build cash, to use cash, to keep cash?
Well, the way I look at it is that in March of 2020, the window of opportunity, in my view, was only open for about 2 weeks. The window of opportunity for doing things at the moment is probably more like 2 years, maybe even 3. In other words, there's a lot of distress. High-yield markets are essentially shut down. Capital markets are essentially shut down. And that's where private equity and private capital, of course, is playing a very, very important role as stabilizer, stepping in and doing things.
Where's the pain? is the question we've been asking around this table. And the price that we're going to pay for 400 basis points of tightening in 8 months, is it really just a 25% move on the S&P, a 30% move on the NASDAQ?
Well, and as you know, the debate about those long and variable lags, I mean, it's still not clear to me personally what exactly that means. But at this point, you still say, okay, well, where are these long and variable lags? We're now, well, depending on how you look at it, but we're at least 6-9 months into these long and variable lags, and we really haven't seen much impact yet. So absolutely, the pain really here is that if inflation does not come down, the Fed will have to go and potentially go a lot more.
Do you follow Denmark football?
Oh, absolutely. I should have worn my red shirt today.
It's a great story. I mean, this guy, Christian Eriksen, had a heart attack. He's come back, and Denmark has whooped France a number of times.
And
I mean, it's maybe the most exciting pairing
He's
there
such a
is.
classy player.
And he's one of the best players on Manchester United's team, and he plays so well today. I love him. He's great.
I mean, it's just, folks, this is really something. This guy, John, I'm not exaggerating. He literally almost died on the field.
Oh, not at all. That's not an exaggeration at all. Came very close, and it's great to see him back on a field.
And they're in the bracket with France, who they've already shown they can beat. I mean, that's the one game I
love
have to
how much
tune
knowledge
into?
you've got on this.
I'm working, folks. I got my Cliff Notes out.
Torsten, I've been discussing just how much things are going to shut down in Europe on the trading floors and how much market volume is going to roll over going into Christmas.
Oh, well, Denmark is playing France on a Saturday. This is Thanksgiving
there you go.
Saturday. I'll be out in Williamsburg watching with all my buddies.
Is that what you're going to do?
Absolutely.
Is there a special bar for Denmark in
Absolutely.
Williamsburg?
This is the
Do
beer garden.
do we
the
get
beer
an
garden
invite?
in
Oh, they
Williamsburg.
serve beer. I'm shocked.
Torsten, this was awesome. Thank you, sir. Torsten Slok there of Apollo Management. Really interesting stuff on the sequencing. How things are developing in a much more positive way in the United States relative to maybe what we might see in Europe, Tom.
Yeah, and he goes on the x-axis, and Dr. Slok says it's simple. There was a window in March of 2020, and now it's this opportunistic gap. And to me, John, it's the zombie roll-up, which alludes to Apollo's abilities.
Coming up in the next hour, looking forward to this conversation. Mike Wilson and Morgan Stanley around the opening bell at 9:30 Eastern
Do you have
Time.
Mohammed on today as well?
We don't.
Damn. I mean,
we're going to catch up with him next week.
Okay, that's
but
good.
Mike
I'm not
Wilson,
going to catch up with him.
Mike, leaning into this bear market rally over the last couple of weeks, talked about having a bias towards the upper range that he had, which was something around 4,100. We're not far off.
The folks, what this is about is he had the mother of all bear market calls, and he nailed the turnaround. How does he do that?
I've got no idea.
Is it Zentner? I mean, how does he?
They've had
the picks he does?
Their framework for the economy has worked better than most. Just to understand where we are. They were calling for that V-shaped recovery out of the pandemic in March, April in the market. They got that call right. I think they had a tough year last year, Tom, but this year certainly, relatively speaking, much less constructive on the equity market than some of the big bulls out there.
Have we said enough futures are up 20? I looked at resistance. I can't remember where it is. I'm going to say 4,045 on SPX is where they break through the bear market. We're not there yet.
Up another 0.5% this morning. This was fun, wasn't it?
That's okay.
Okay. We got through it.
Where's my Tang Zero?
Just about.
Here it is.
I'll catch you on Bloomberg TV in the next hour. Tom will be over on Bloomberg Radio. We'll take a break from each other going into the weekend. Live from New York City. Good morning to you all. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The Biden administration is sending Ukraine more weapons and military vehicles valued at up to $400 million. The package includes Boeing's Avenger anti-aircraft systems. Weapons are being taken from existing U.S. stockpiles. Israel's president will officially ask former Prime Minister Benjamin Netanyahu to form the next government. Netanyahu's Likud party won the highest percentage of the vote November 1st. He's expected to create a right-wing coalition that will rely on a number of politicians whose stances on minority rights are controversial. The energy minister of Saudi Arabia says OPEC Plus will remain cautious on oil production, and that comes weeks after the group made the Biden administration angry about lowering output. Prince Abdul Aziz bin Salman spoke to Bloomberg at the Climate Change Summit in Europe.
It's about being responsible and not to lose sight of what the market requires, the industry requires, which is market sustainable stability of the markets.
That was in Egypt. OPEC Plus meets on December 4th to decide whether to cut production again. SoftBank's Core Vision Fund arm has posted a $7.2 billion quarterly loss due to write-downs on its tech investments. Billionaire founder Masayoshi Son turned his telecom company into the world's biggest startup investor. But the effort has been plagued recently by a sharp downturn in tech valuations. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
There's a terminal rate problem in the equity market. In other words, we have no idea when the Fed is going to stop. And they mentioned last time, maybe we'll pause and maybe there's a lagged effect to all of our tightening. But that's besides the fact. If we continue to get sticky inflation, there is no Fed member that wants to go down in history as losing the fight on inflation.
Phil Camporiel, portfolio manager at JP Morgan. I don't know if that was before or after that bombshell that we saw yesterday on inflation, but there it is. And everybody recalibrating over the weekend on the various Sunday market forces. Futures up 20, Dow futures up 156. The VIX from a 25.26 into a bull market 23.57. The Dow, I think, 1 year trailing, maybe negative 6%. Like near correction status. I do want to note Brent crude at 3% today, a 96 handle on Brent crude as well. In this 8 o'clock hour on a Friday, you need to regroup. I need to regroup. There are 14 stories to regroup to today. We choose Edward Ludlow. He is with Bloomberg Technology, and I must say, Silicon Valley, the warning is clear. You have been warned. Caroline Hyde and Ed Ludlow starting Monday with Bloomberg Technology. Looking forward to that, and particularly the acuity of Ed Ludlow on the scene in tech. What a mess at Twitter, Ed Ludlow. Instead of a question from me, what's a single item in the last 24 hours that has your attention on the Musk saga?
That Twitter's finances are in a perilous situation. Sources tell me that Musk told staff on Thursday he does not know what the run rate for this company is. Tom, he tweeted that cash burn is at around $4 million a day. But, the change in the equation is that the advertisers have pulled the rug out from underneath him. There's been a pretty precipitous drop in revenue. And even those staff that he retained after 50% layoffs, many of them are now resigning. So it's kind of falling apart over there. And now I'm understanding that the banks are getting very nervous about the debt portion of his financing.
That's where I wanted to go to, is who drives and early. And I want to be very respectful, folks. There are rumors, speculation of bankruptcy, not what we're reporting. Ed Ludlow, when you mention the banks, who controls the debate to Mr. Musk about that onerous debt?
Yeah, well, just very quickly on bankruptcy. I mean, he said that bankruptcy is a possibility, according to sources. He's not saying that they are bankrupt, as you point out. I mean, the problem for the banks is that they still have to go basically cap in hand to Wall Street and sell this debt. And one of the ideas is that now revenue's dropped. There's talk of some people buying up the debt on 60 cents of the dollar. This is the kind of territory we've got ourselves into. So some kind of restructuring of the loans is being touted as a possibility. Remember, we reported that Musk's plan for this is to use himself as the marketing mechanism. He's telling his bankers, put me in the room, put me out there, coach, and I'll explain my vision for this company. Whether that goes down with the credit market, I don't know.
The equity quality here, then, I noticed there was a sale of Tesla stock, etc. To be blunt, is Mr. Musk solvent when you take into account his obligations on Twitter?
So his sale of around $4 billion of Tesla stock earlier in the week, it just has added to the confusion, frankly, because we don't know whether that was to add to the equity portion of the financing to buy Twitter, and he's kind of catching himself up with a cash flow perspective, or if he's going to use those funds to keep Twitter running, because we know that they are going to have pretty severe debt servicing commitments on an annual basis. The pitch this week is bear with me from Elon Musk to both his creditors, to the advertisers on the platform, and frankly, the users as well. I know you're on Twitter, Tom, but the platform has been chaotic for want of a better expression, in the last 48 hours.
Yeah, let me switch gears here, Ed, and this goes to what we're going to see from Caroline Hyde and Ed Ludlow beginning on Monday. What you're known for, Ed, is an ability to jump from story to story.
Sure.
I would suggest there's a story developing at Jeff Bezos' Amazon. Is it
100%.
Excuse me. I'm gasking, folks. It's a Tang Zero. I've got to get... Ed, you got to try Tang Zero. It works every time. Ooh. Ed Ludlow, help me here with Amazon. Does Mr. Bezos reassert himself into the debate?
But this story about, cost discipline is about Andy Jassy asserting himself in the post-Bezos era, right? That's what the mainstay of his tenure's been so far, that in the pandemic era, Bezos committed billions of dollars, get the packages to people as quickly as possible, hire as many people, open as many fulfillment centers as possible. When Andy Jassy took the reins, the world had changed. He came from AWS, the cloud business, right, where you squeeze out all the margin you can. Now we're seeing that reflected in this business, the Journal reporting that they're identifying the least profitable businesses. They're moving talent from those businesses to places that are making money. And the world has changed. But the inflation print is a real driver in this story because it gives us reassurance going into this holiday quarter for Amazon that the consumer will spend a few dollars.
Ed Ludlow, in your world, are the boards gaining new powers? I mean, I don't need to go, we don't have enough time like on Meta, private Twitter, Amazon, Apple China, Do the boards have power, or is it all about this billionaire, that billionaire?
This is the test. The founders are still in control. The share classes make it so, but the investors are losing patience. And I don't know the answer, Tom, but I'm guaranteeing you that in the next 6 months, we're going to find out.
Have you picked out the theme music for the new Bloomberg technology? Are you using like Jefferson Airplane or something I can go with?
I've got something more my era in mind, but we'll see.
Well, put me in my place. I like Serialistic Pillow. I'd go with what Grace is doing in the early 60s there when they were starting out as well. Ed Ludlow, congratulations on the new effort with Caroline Hyde. We look for that on Monday. Mr. Ludlow coming from our San Francisco bureau this morning. I want to parse through the data right now. And I do think it's very, very important. We're going to take a real minute here to get on to what John Farrell's going to do on TV in a bit, and we'll do over in radio. I will not mince words yesterday. What I saw yesterday, folks, at 8:30 and 30 seconds, at 8:31, and I'm going to use this word with great respect, I've never seen it, ever. The power of the short cover that we saw yesterday at 8:30 was absolutely as extraordinary as Global Wall Street knows. It continued through the day with acceleration into the market close in the U.S. And quite frankly, there's a lift today that we'll see. It'll be interesting to see where the VIX closes here. Futures up 22, Dow futures up 167. The yields, well, with Veterans Day as we honor our soldiers across all of the world, and particularly here in America. I know the Vice President will be at the Tomb of the Unknown Soldier later today as President Biden travels. But what's so important here is the character of the move that we saw yesterday. Stay with us as we see how this Friday unfolds, and far more importantly, through the weekend to the Asia opening to see what next week will bring, including critical PPI data, which maybe was important, but now after what we saw in CPI yesterday is extraordinary. With an economic analysis into the politics of the nation, the laureate Paul Krugman will join David Weston this morning on Bloomberg Balance of Powers. Stay with us on television, on radio,